Good morning, everybody. Welcome back to another episode of the Market Open. It is Thursday, May 22nd, and we've got a decent amount of things to talk about. The past 24 hours have been rather rocky, to say the least, in the stock market. We do have Bitcoin at all-time highs at 111,000. It's kind of crazy because it's almost like you think it would feel a little different, you know, just in terms of like, hey, it's Bitcoin. We're at 111,000. Yesterday we hit 109, which was the previous all-time high, and now we were $70 away from 112. We were at 111.933. It's kind of crazy how this is happening, why this is happening. The S&P 500, the Nasdaq, they are not at all-time highs, but Bitcoin is, and I think that's quite telling about kind of the state of the markets, the structure of how people are thinking about the U.S. economy. And so we'll be talking about that. That's obviously something that's going to be very important and probably will be affecting a lot of the equities today that are associated with Bitcoin. On top of that, we've got the bond markets that we will be talking about a lot today because, quite frankly, the bond markets are the reason for why we are seeing some of the weakness that we saw in the equity markets yesterday. I know the S&P 500 was only down about 1.5% after hours based on what happened in the bond markets. Today at 9:30 is going to be very important in the next 40 minutes when the markets open. How much does the market actually care about what happened in the bond markets once we actually get some real volume entering in to the ecosystem? You can see the 10-year right here, 4.605. It's not slowing down, and you can see this across the entire world. Germany's 10-year, France's 10-year, United Kingdom's 10-year, Spain's 10-year, Italy, Japan, Australia, all of these yields spiking over the past 24 hours, and that has to do with the 20-year bond auction that we had in the United States. We'll talk a lot about that today. But this is obviously creating some problems in the equity markets, at least perceived problems right now, because a lot of stocks are up in the pre-market, like they're green. So I'm really curious today, and I have some thoughts and opinions on if stocks actually will be affected by what we saw happen yesterday. Kind of leaning towards no, and the basic argument is that if people are selling off their bonds, they have to buy something, and maybe they're buying stocks. But we will kind of talk about the implications of all that and then keep going from there. And then solar stocks right now in the pre-market are tanking as well. Enphase down 19.35%. I'm actually seeing that right now. I don't know what the headline is. I do know a lot of these guys got downgraded over the past couple of weeks. I'm assuming something happened this morning to really get solar to get hit off an edge. Oh, I think it's in the tax bill. Oh, which is the other thing that we have to talk about. The tax bill got passed by the House, which is literally just happened like 10 minutes ago. Yeah, the subsidies for solar panels for rooftop solar panels are being scrapped in the new tax bill. Yeah, there you go. That'll do it. That'll do it. So Enphase down 20%. Run, ticker symbol Sunrun, 34%. What about First Solar, FSLR? That's down only 2%. That's a little bit more commercial versus residential. So I think that one's going to be okay, or at least that one's okay for now. And then Solar Edge, how about that one? Yeah, that one's down 18%. That is aggressive. That is aggressive. Yep, there you go. Solar stocks crash after House passes Trump tax bill ending the 30% of rooftop credit. Dude, solar has just not been the thesis that people thought it would be over the past couple of years. It had its moment. You already got oil prices that are down, in that $60 range. That already makes it hard for people to feel the incentive to want to save money, quote unquote, on solar. And then you got Trump's tax bill that kind of just decimated the subsidies that existed for solar. Yeah, it makes sense that they're down 20%. I mean, why would they be stable in a world in which one of the reasons people got solar was because of tax credits? But if those tax credits are gone, there you go. Enphase down 19% here right now in the pre-markets. All right, we got a lot to talk about. A lot to talk about. Good morning. Thank you, everybody, for being here. We're going to get into what's going on in the bond market, see what's happening. Also, HIMS, real quick. Yes, this stock also is down. It has something to do with Cigna. HIMS right here down 8%. Again, this is another reason I don't own the name, because I honestly can't really tell you why HIMS is down. Like, I can give you the headline, but when it comes to analyzing why the stock is I don't know, because I don't really know this space that well. So the headline is that there is a Cigna deal with Novo and Lilly, and I don't even know if that really affects HIMS in the long term, but it's affecting it in the short term. And so one of the reasons I stay away from the name, and maybe if we get a little bit more of a dip, I get excited about it, is because I just don't know enough about the space. And it's hard for me to own a stock and it goes down 9% and for me to not understand why. Like if Hood was down 9%, if Palantir was down 9%, I could probably explain why. And my conviction is so deep that I would buy that dip if the reason didn't really matter. But for Hims, I don't know. Is this a big deal? Like, if someone tells me it's not a big deal, okay, but like then I have to believe them. I don't fully understand if it's a big deal or not, and that's just because of my ignorance in the space. Now, realistically, I think it's not that big of a deal because we've seen these headlines so many times for Hims. But this stock right here down 8.3% after being down 5% yesterday as well. Yeah, I saw the Bank of America downgrade, but the Bank of America hates this company. They're just like not a fan. They're like ultra bears on Hims. I have the report. We'll read through the report as well today. But you know, they've made their stance very clear that they're not a fan of this stock, and you know, ultimately they'll be either right or wrong in the long term. So far, they've been wrong. They have a $28 price target. Stock right here is almost double at those levels. All right, cool. Let's get into it. Good morning. Thank you, everybody, for being here. Let's start explaining, or hopefully I can attempt to explain what's going on in the bond market and why stocks went through an intraday pseudo crash. I even struggled to use the word crash because it wasn't a crash, but the S&P 500 fell 2% after being up 18% over the past couple of weeks. So I don't think it was that big of a deal, at least yesterday. Today is going to be a different story in terms of how the market ultimately perceives what's going on in bonds. So let's talk about it. Yesterday, the market open was a party. It was fun. Bitcoin was going up. Everything was cool. You know, Nvidia was pushing 137. Hood was trying to get to 67. It was a fun day. And then at around 1:30, we had our 1:30, we had our bond auction, 1:30 Eastern in the United States. And it's not like the bond auction failed, because a failure would be no one wants to buy our 20-year bonds. Remember, the way we finance our government is we issue debt. People buy that debt. We pay them a percentage of interest on that debt. We're going to be paying out about $1.2 trillion to all of our debt issuers by the end of the year, which is more than the defense budget. That's a lot of money. But the point is, that's how we fund our government. We have 10-year bonds, 2-year bonds, 20-year bonds, 30-year bonds. Like, we have a lot of different bonds. The 20-year bond, as you can see right here on the screen, spiked because it's not like we didn't have bidders. The problem is we also had a decent chunk of sellers into the ones that were bidding. So yes, we had people that were willing to buy and like keep it stable, but we also had plenty of people that were willing to sell. And so the sort of technical reason for this intraday sell-off was that the 16 billion auction we had yesterday, selling 16 billion of the 20-year bonds, the market thought the yield would stop at 5.035%. And the market would have been okay with that. And I think we probably would have had a good day towards the end of the day if that's where it stopped. However, although people stepped in, the yield on that 16 billion bond auction actually stopped at 5.047%, which might not seem like that big of a deal, but in the bond market, every basis point and every percentage of the basis point really, really matters, because it's the cost of capital. These are not supposed to be as aggressive as like a stock that goes up 2 or 3% in a day. They're supposed to be much more stable because, again, they are financing the government. Like, you're not supposed to have that much volatility. So as a result of that, when we had that intraday rise on the 20-year, you know, it might be bullish for stocks because people are like, okay, we're selling off bonds. We have to put our money somewhere else. We're going to go to gold or crypto or the stock market, et cetera. But I think the perception of this type of a move on the 20-year treasury bond yesterday, mixed with what's happening with Moody's, with the credit down rating, which probably induced some of the selling that we had yesterday on the 20-year, mixed with the deficit spending on the Trump tax bill, which we'll talk about as well. That was big news this morning. And the perception of that is that, hey, we're going to increase a minimum of $3.5 trillion over the next decade when it comes to the overall national deficit in the United States, which right now is at about like 2.1 trillion. That is leading the bond market to say, hey, is there a structural problem with the US economy? I think the answer to that is no, right? And the market probably doesn't think there's a structural problem with the US economy, but like, they're going to react to that. Like, just like when Moody's, is that a reason to sell Nvidia for the next 10 years? Probably not, in my opinion, but they're going to have a algorithmic headline reaction. So yesterday's move in the bond market, and people saying, hey, we are not going to be buyers of the 20-year. We're going to be net sellers, even though obviously there were buyers, but the perception of how much selling versus buying ended at 5.047 versus 5.035. That created the market dynamics to get people to say, hey, maybe things are breaking. Maybe things are a little bit scarier than we thought. We're seeing what's happening in Japan and Germany. Maybe across the entire world, there's not enough demand for debt because of overall global inflation, if not, mainly United States inflation with this deficit. And that's why people got scared. And that kind of, to an extent, explains the madness we saw yesterday after hours when the bond market started to go down, or when yields started to go up. And it also kind of explains why Bitcoin started to go up. We'll talk more about Bitcoin, but kind of the reason why Bitcoin is going up right here, in my opinion, is like, hey, wait a second. If people don't want to buy our bonds, and again, people bought our bonds. So when I say this, it's saying this kind of in a vacuum, because it's like we had bidders for the 20-year auction, but we also had some sellers. And because we had a bit more selling than buying, the perception is that people don't want to meaningfully owned our bonds because of whatever fears they have, whether it's debt, deficit, inflation, etc. And they're going to other assets. And in this case, one of the assets that hedges against all of that is obviously Bitcoin, if you believe in the long-term potential of it to not debase our currencies. And that's kind of what happened yesterday, which is why, the markets freaked out and why all these growth stocks took a little bit of a hit. Again, I struggle to even say that they took a hit. Robinhood's at 64.90. like a real dip on Robinhood to me is like 55, 50, a couple of dollars, 1 or 2%. That's really nothing. Same thing with Nvidia, was at 137. Now in the pre-markets, it's at 132. Yesterday it ended at 131. It's like we didn't really feel a shock to the system in regards to the stock market. We just saw an intraday sell-off, which is, given we were all going through April, I think we were all able to deal with a 2 or 3% down day when it came to that intraday sell-off. So, what is the take on how we're going to resolve this? I think it's actually pretty simple. I think Besant needs to come out and say, "Hey, we have more trade deals coming along the way. We're working really well with Japan, India, and South Korea." He just needs to calm down the credit markets by saying, "Look, we are going to get a lot of deals done. Those deals are going to be done in an effective way, and those deals will facilitate the ability for tariff inflation to not be that aggressive." On top of that, Trump could easily come out and say, "Hey, that 10% reciprocal tariff I have across Zimbabwe and South Africa and Thailand and Vietnam, that's going to go down to 7.5%. That immediately would take the average tariff inflation rate, which is now at 14%, down to maybe like 11%. And as a result, you would have market expectations say, "Hey, inflation might not be that big of a deal. Maybe the Fed gets more likely to cut." Obviously, that's easier said than done. And it was pretty easy in April when Trump just said, "Hey, 90-day pause," and the markets rallied, the credit markets calmed down, bond yields started coming down. But the point is, I think something will need to happen if we start seeing a broader break in the bond market. We're not really seeing the bond market break yet because people are still willing to buy our debt. Breaking might be, I don't know, 10-year at 5%, 10-year at 6%, which would just be aggressive. And I don't think that's happening anytime soon. But if that does happen, then yeah, we're full on breaking. I think we can handle 4.58. We can probably handle 4.7, 4.8. We get to 5% on the 10-year. We get to 5.5 on the 30-year. We get to anywhere near 6% on the 20-year. Then I think we have an actual breaking problem. And remember, the S&P 500 was at 4,800 when Trump issued the 90-day pause. So it's like things were like breaking in the stock market, and yields were spiking. You can't have stocks go down and yields go up. So when that was happening back in April 8th, that's when Trump finally came out and did something. We're not there yet. We're not there. Nvidia's good. Robinhood's good. Palantir's holding triple digits. Tesla's almost at 350. Tesla's now like 330 after yesterday's sell-off. But we're not at that point where it's so ugly that Trump needs to come out and do something. So my takeaway from this is it's not a sell the news. It might not be an easy buy the dip in the moment because maybe we have some more pain, but given the retail momentum that we talked about over the past couple of days, I think there is some buying of the dip. The fact that stocks are recovering in the pre-market already, even slightly, means that there's some buying of the dip. And more importantly, and this is kind of the final take on the bond market, and then we'll talk about Trump's tax bill. Institutions are net underweight equities. So maybe the institutions are waiting for this whole thing to collapse to give them like a better entry into stocks, but they are ready. And I think they have their finger on the trigger, which is the buy button, and they want to get in, but they might just be waiting for a really good opportunity. Maybe they don't get 10% down. Maybe they get 3% down and then they buy, but they're waiting. And so if the bond market and Moody's and the deficit spending gives you a reason to get back into Nvidia, if it goes to like 110, but then Nvidia say only dips to 115, I think they will buy that dip at 115. The question is just going to be when and if that ends up playing out. So that's what we got on the bond market. We'll keep talking more about it throughout the day. And at 9:30 when the market opens, we'll see how much the market actually cares about the 20-year not having a failed auction, but not necessarily having the best auction that the market wanted. Shout out to Mr. Derek Wall for the 50 gifted. A lot of you guys have been asking, where has Derek been? For those that don't know, if you're new to the channel, Derek is a very good friend of mine. He is a mentor of mine, and he's been watching the channel for basically since 2021 when I didn't know what a market cap was. And I didn't know he was watching, but he was watching, and he's been slowly tracking my journey over the time. And he reached out a year ago, and we became good friends. So that is very kind of you, Mr. Derek Wall. A bunch of you guys just got some memberships. Inbound, you got a membership. Fardak, you got a membership. Loophole, you got a membership. Sushi Trader, you got a membership. And Harpreet Singh, you got a membership. And I think another 45 of you also got a membership. Triple V is not Chris Camillo. I can promise you guys, Triple V is not Chris Camillo. It is, although Derek does know Triple V. Derek does know who Triple V is. So shout out to Derek. Thank you, brother, for spreading around the blessings. One thing about Derek that is really interesting is that he's building a startup right now. And that startup is, I think, going to be a really big company one day. I don't want to put out numbers, but I want to put out numbers anyway. I think it can become a $100 billion company. I really do. And I know that's crazy to say. Derek is someone who has built multiple startups in the past, multiple exits for hundreds of millions of dollars. He's an executioner when it comes to being able to actually operate at scale. And he's starting a new startup. So the kind of update in my life is that yesterday, this is probably why he's in the chat right here, to reintroduce himself, because he's been underground literally for like 3 months, just working and doing his thing. This freaking guy, bro. Triple V, shout out to you as well. Derek got you today with the 50 memberships, but Triple V, thank you for being here. So now you guys know Triple V and Derek know each other pretty well. They're good friends. I love that he came in right here. So Derek is building a startup, and yesterday something was really cool. Derek very graciously, so I invested in the startup. I invested $25,000 in the startup, and I invested back in like January. Derek very graciously gave me another $19,000 worth of shares in the startup, but he did it under this thing called the QSBS. For those that don't know what the QSBS is, it is a qualified small business stock part of the overall tax bill, which when you're gifted stock in a startup, when you go to sell it in the future, $10 million of that stock is saved from federal capital gains. The exact rule is either 10x the cost basis of your initial entry into that stock or into that small business, whatever it may be, which one day might become a very big business, or $10 million, whichever is bigger. And so based on my cost basis in the startup, 10 million would obviously be bigger than 10x the amount of that cost basis. And so if it actually does become a multi-billion-dollar company, which I think it could become a multi-hundred-billion-dollar company, to be honest, maybe I'm a little aggressive in my analysis right here, but I really do believe he's building something special. He basically gave me $10 million, which is absolutely insane. Obviously, the startup has to work. Startups can fail and all that stuff. But yeah, I'm really grateful. I don't even know how to put into words what that means, but it basically equivocates to 270,000 shares, and I already bought 80,000 shares myself with my investment. So I think the greatest investment of all time that I'll ever have in my life is not Palantir, it's not Hood, it's going to be Derek's startup, if it works. Which again, I'm betting with my own money that it's going to work. And he was gracious enough to give me the most you could give underneath the tax laws for free to me as well. So yeah, I have 350,000 shares in his startup. And Triple V is also invested in his startup. Triple V put in a little bit more than what I put in his startup. So if it actually does get to the valuations I think he can get to over the next decade, he's also going to, do very well. So shout out to Mr. Derek. It's really cool, dude, because like last night we were on the phone for like 2 hours and he was educating me about this qualified small business stock thing. And like when he built the pre-seed round for the startup, you have to have certain requirements to be able to even qualify to be able to give people a QSBS. So for example, your startup cannot be worth more than $50 million if you want to be able to gift people like friends and family stock, because then it's not really a small business, because in America, a small business is classified as $50 million or under in terms of valuation. So a lot of different things he had to do in terms of being able to raise this stuff and talking with lots of lawyers, and God knows how much money he spent on lawyers to be able to get this done. But last night I got an email from one of his lawyers and she was like, "Hello, Amit, I have a gift for you." And it was one of the best emails I ever got. So shout out to Mr. Derek. He is a very, very big mentor in my life. Part of the reason why I don't sell courses or Discords or all this stupid shit that I think a lot of the finance YouTube community has gotten used to, which I think a lot of people are starting to reject because they just don't want to be sold anything, is because the connections I've been able to make from building a brand and just trying to be myself and learn on the way and not act like I'm some expert and just like kind of put myself out there, but also be humble enough to admit when I don't know everything, is that the connections you make tend to be worth a lot more than the $5 per month that you can get out of monetizing an audience. And, if Derek's startup succeeds, whatever I make off that will be much, 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 much more than monetizing an audience. And then the reason he's doing this is because I never tried to sell out and monetize. It was always just a sort of authentic approach with the audience from the beginning. So shout out to Mr. Derek Wall. Shout out to Triple V. Very, very good mentors I have in life. And, yeah, I will keep you guys updated on the journey. I think you all will be able to invest in the startup eventually. They're not doing a funding round right now. I think maybe in the next 12 months to a year, 24 months, they will open up a potential part of the public funding round. It's up to him, though. He's got a lot of stuff going on, has a lot of different investors. They might end up raising a different round in the summer. So I don't know if there will be anything open to the public, but potentially it's just based on how big they can scale, right? And you guys wouldn't want to invest right now because right now is the most risky. Right now you could lose, right? So I would not want to even present the opportunity to you guys. And me and Derek have talked about this because like people could lose I could lose my 25 grand, right? Like, and I'm okay with that. But once it's more established, even if it's at a higher valuation, it probably will make more sense to let people in the public have a chance to invest. So thank you, Derek. Appreciate you. Thank you, Triple V. And yeah, wishing you all the best on this startup journey. Vsop says, don't care. I want to invest in Derek. That's dude. As soon as the lawyers emailed me in January, they're like, hey, Amit, your investment portal is open now to invest in the start. Like not even 2 seconds later, I sent the 25 grand. I was like, here you go. Take my money. Take it. I believe in Derek. Take it. I don't even know exactly what the startup does. Just take it and keep it there forever. I do know what the startup does. It's a little bit hard to explain. It's B2B software. It's not humanoid robots. It's not sexy. It's kind of boring, right? But like still, I think it's going to be one of the biggest AI companies. It is an AI company over the next decade. It's just no one knows about it, which is really cool to see because everyone's talking about OpenAI and all these other AI names, but like this one, I think actually could be really special. So thank you to Derek. Appreciate you, brother. And thank you to Triple V as well for being here and being mentors in my life and, really, really giving me these opportunities. All right, let's talk about the tax bill. So the U.S. House of Representatives, they passed Trump's big, beautiful bill, 215 to 214, barely got passed. And this is another reason why the 20-year, as soon as this passed, was actually higher than what it was last night. So last night I showed you a picture of it was up 5.014%. This morning, it currently is at 5.142. And the reason for why it spiked is because this tax bill, if it actually gets through the Senate, is going to increase the deficit by estimates of about 3.5 trillion. 3.5 trillion over the next decade. And what's interesting about this is that now it goes to the Senate. In order for it to actually get passed, it has to go to the Senate. The Senate has to pass it. Now, if you know about kind of how the Senate works, you need a majority. You need at least 60 votes. There's not 60 Republicans, and none of the Democrats are going to vote for this shit. So how is it going to get passed? It's going to have to be through a process called reconciliation, which is how the 2017 Tax Cut and Jobs Act was also passed. It's also how the Inflation Reduction Act was also passed. What is reconciliation? It's a fast-track legislative process in Congress that allows certain budget-related bills to pass with a simple majority in the Senate, aka 51 versus 50, bypassing the filibuster. Kamala Harris was the 51st vote on the reconciliation package for the Inflation Reduction Act in 2021, and Mike Pence was the 51st vote for the Tax Cut and Jobs Act back in 2017. So there are 53 Republicans in Congress, which means Trump is allowed to lose 3 Republican votes. He can lose 3 Republicans when they get to reconciliation to vote for this. But then he needs J.D. Vance to give him that 51-50 split. So there's 3 Republicans that Trump will definitely let us know who they are if they don't vote for this, but he's allowed a margin of safety of losing 3 people, and then the big, beautiful bill becomes permanent. Now, why are the bond markets getting upset at this? Because it's going to increase the deficit. What is Bessent's and Trump's answer to this? Well, don't worry, we're going to outgrow the pace of the deficit. We're really not going to know until the next 5 to 10 years play out if we're actually going to be able to outgrow and have GDP at the levels that we need to be able to make sense of all the deficit spending that we are taking. Obviously, if you're looking at all the 10 years right here on the screen from the past 24 hours, the bond market's not buying it. The bond market is not buying it right now. In fact, take a look at this. For the first time since 2021 in October, the U.S. 5-year to 30-year bond spread has steepened to 1%. The last time this happened, inflation was at 6.2%. Inflation right now is at 2.3%. So the fact that we're seeing the steepening of the yields on various spreads, and then obviously seeing the 10-year get to like 4.6, the 20-year get to 5.1, means that markets are pricing in stronger growth, which is good, but higher inflation and definitely higher interest rates for longer, because the Fed is not going to cut if they think the deficit spending that we are incurring based on this big, beautiful bill is going to create a lot more inflation over the long term. So I mean, what does it mean for equities, right? Like, I think quite frankly, it means you hold on to your stocks, because you definitely don't buy bonds because you're afraid of what's going to happen to your purchasing power. But you got to buy something that outgrows inflation, that outgrows GDP growth, that really, like, being a growth stock investor to me is the most important than it's ever been. Because if you're going to allocate capital, it has to grow rapidly. You cannot invest in things that don't really show growth. And if they're not, you better have a hell of a dividend yield, or that company better be really strong to be able to maintain its value so that the dividend yield outpaces the lack of share appreciation on the stock. Because if you're not growing in a world in which things are inflating, I mean, like, what are you doing, right? Your capital is just eroding. All your purchasing power is going away. And that gets us to the conversation of Bitcoin. That is why I think Bitcoin is at $111,000. I quite frankly think the reason Bitcoin is getting to these levels is simply because people are losing faith in the overall treasury system that the United States has. And they're saying, look, the deficit will keep going up no matter what, essentially in eternity. I showed you guys this picture yesterday. For those that didn't see it, this is like the Matrix. When you see it, you can't look past it. It is a literal iceberg. This is the amount of revenue we take in, our deficit, and then our debt. And it goes back till 1980. Every single administration, no matter how much they have promised, has not been able to get the job done. And it's probably not going to happen in the future either. And as a result, I think the solution is you hold on to really good growth stocks. You probably hedge with some level of crypto exposure, and you just hope that our GDP and our military will be strong enough to keep confidence in the United States, even if our deficit continues to go higher. Kris Patel, good morning. What is your take to this new tax bill that just got passed in the House?
Okay, so there seems to be a lot of, I wouldn't call it misinformation, but halfway information, and people are freaking out about it. So let me break a couple of things down. First, let's tackle the tips thing. Okay, there are roughly 4 to 5 million people working on tips, and most of them don't even break the $50,000 amount. So, and there's a cap on tips. It's not like you can write off unlimited amounts on tips. There's only 25,000 that you can write off, right? A person making $50,000 to $60,000 on tips, that's roughly like saving maybe $1,000 to $2,000 per person. And if you combine everything together, the total cost of no tips to the government in terms of revenue loss is $10 billion per year. Okay, we spend more money on more retarded, I can't be using that word, on more useless things than you can imagine. Okay, the cost on our debt per year is about $1 trillion right now. Okay, so first and foremost, stop blaming your waiters like, oh my God, this guy's gonna be freeloading off of not having to pay taxes. Like, come on, these people don't make like crazy high amounts. Like, even people that are like making a higher amount, let's say 100,000, it's capped above, right. I think it's like capped at like 160,000 total. Overtime is the same exact thing. It's all capped, right? So it's not like, oh my God, Jeff Bezos can go ahead and say declare his entire income as tips and overtime and not have to pay any taxes. So a lot of the Democrats have been coming up and saying, oh, this is a tax cut for the billionaires. And I'm like, no, it's not. Like, just, it's right there. People don't even realize that there's actually caps built in, you know?
Yeah. It's a 160K is also that tap as well.
Right. Yeah. So this whole thing about, oh, billionaires are going to get rich off of not having to pay taxes on overtime. Like, what are you talking about? Like, and here's the other kicker on it. They still have to pay payroll taxes in Social Security, Medicare, and Medicaid anyway. Okay.
So is your take kind of here that the tax cuts on overtime and tips, that's all minuscule? The bigger problem is the tax cuts on corporations, the deficit spending. Is that kind of what you're more upset about here?
No. So there's two things that really push things a little bit over the edge. Number one is that huge increase in SALT cap deduction, right? So before you were capped at 10,000. Now you're capped at 40,000. Okay. And as a married couple, you can make up to $500,000, right? And all the taxes that you would pay to state and local, like property taxes, what is that thing called? Your income taxes from the states. You can take all of that money and deduct it now. Whereas before you could only deduct 10K. So like here's an example. My brother-in-law and his wife are a doctor and lawyer, right? They make probably $500,000 combined. Okay, before they could only I think combined maybe like in terms of total salt taxes do like 10 or 20,000 dollars max. Okay, which means everything else they had to actually declare as income to the federal government and pay the entire amount. And at their bracket, they're paying like I think about 30,000 what do you call it, 30% marginal. So that's a significant amount. So with this, it actually increases their tax savings significantly, especially when it comes to property taxes. Because if you go to like New York, like Westchester and Long Island and parts of California that are paying like 14% income tax, and on top of it paying property taxes that are high, it's the same thing. And then same thing with like New York, where you're paying city taxes, state taxes, and then you have property taxes. So these are high cost states that are basically getting this huge benefit. Now, they had the power to do this because if, let's say, this if this tax bill hadn't gone through, they would have got unlimited deductions like it was in the past.
Right.
Right. So Trump came in, negotiated, and said, let's keep it at 40K. And once again, this does not benefit billionaires. Like, let's say a billionaire pays $200,000. I mean, I don't know any billionaires paying 200,000, but let's say you're a millionaire and you make $1 million, $2 million per year, right? Before 2017, you could take that entire amount that you paid to the state and local and property taxes on your mansion in the Hamptons, write that off against your federal side. Now you can't do that, right? And you can only do a certain amount. So technically,
why is the bond market mad? Why are they upset about this?
So a combination of things. Number one, it is more revenue loss, right? So over the course of 10 years, you're going to see revenue losses come up. And then all the data that's coming out is saying, look, you're going to be increasing deficits by $2 to $3 trillion. The bond market's like, look, you're already in the hole with 36 trillion. You should be controlling your spending.
Right.
Now, this is why in September, I think when Kamala was, like doing really well in the polls or whatever, you started to see kind of, the expectations that a lot of these what are they called? The tax cuts would end up getting sunset in 2025, and that now you would have all this additional revenue that was coming in that could help pay for some of the deficits. Right now, we're not doing that. Now this administration's goal is, well, we can just grow ourselves out of it. And according to the CBO, the way that they do their like analysis, they say that only GDP growth is going to be 2%. Like there's no what is it called? There's no room for hey, what if we grow at 3%? So I kind of agree with the CBO. Like you shouldn't be figuring things out with like maximum like what is it called, maximum confidence. Be like, yeah, we're definitely going to go at 3% per year. That means that the deficit doesn't matter. Like, no, that's stupid. Like that's like the same logic that all these people used in 2017 saying, don't worry about the deficit, we're going to grow ourselves. And then we got hit by a pandemic and now all of a sudden we've got into more debt, right?
So do you think the stock market deserves to take a meaningful decline based on this bill passing? Or it's kind of like, hey, if people are selling bonds, you might as well buy stocks instead because that's better than bonds?
I mean, you have to look at each company individually and see how.
No, but I'm talking about the market. Like yesterday, we had the intraday sell-off from the 20-year spike. Is that a nothing burger to you, or is that something that requires a little bit more attention from the general public?
I mean, I think the general trajectory is something that we should all be concerned about. The challenge isn't when times are good, Amit. The challenges typically come when things go bad. Right. So let me explain that. So like right now, things are not so bad, like in terms of economy. But if things go south, your GDP growth goes down. So all these wild, like, oh my God, don't worry about it, we're just going to grow ourselves out of this. No, now the government has to come in and dump like $700 to $1 trillion of liquidity just to get the economy running back again. I mean, most of the reason why we're in these deficit holes, right, is not because like, oh, we didn't have enough revenue every year. It's because we got into a bunch of wars that we didn't have to go in. We keep spending money on the military and we don't have anyone to fight, right? Like there's no reason why we should be spending $1 trillion on military. Just think about how much of our budget goes towards military spending like that. It's insane, right? We let costs on healthcare go out of control with Medicare and Medicaid. So I think Bessent is right when he says we don't have a revenue problem, we have a spending problem. And
Do you have any faith that spending will be cut anytime soon? I mean, definitely
I
not in
mean,
this bill, right?
I mean, from what I'm seeing, there are green shoots coming up. Okay, like here's an example of a couple of things. Number one is Medicaid, like work requirements for Medicaid. Okay, like Medicaid and SNAP benefits. Like we've doubled our like SNAP program, and we haven't put any like guardrails around it, saying, look, if you're an able-bodied person, you should at least go and get a part-time job, right?
Right.
All of those things we just kind of put on the credit card, saying it's okay. You're not doing well. I got you covered. Like it's one of those things where we keep growing this entitlement state, and I think that's a bigger problem than people realize. Not just from the angle of like, hey, you don't want to help the poor or anything. To me, it's like the government and us taxpayers have spent literally $1 million getting a fully formed human from birth all the way to the prime age of 22, 25 years old, and now this person is still on the government dole. Like, no, like get them off, get them to work, give them some pride, like bring pride back into the people's lives. So like right now, dude, how many people, like I know a few people right now, they don't have jobs and they're just chilling. They're like, it's okay, I'm just living with my mom and dad. It's like, and their mom and dad cry every day. Our community, how shameful it is to not work.
Yeah.
Like, bro, imagine right now you weren't working or you were not bringing any income in. How would your parents feel about that?
Dude, my dad already cries. I'm on YouTube all day. My dad doesn't think I'm doing shit. No, I'm just kidding. But, no, I get your point, right? It's like it's a really question of the perception of what's going on here. So, okay, Kris, here's another question. Then, Fannie and Freddie, can we talk about that? Trump said he wants them to go to public. What is your take right now?
I think that's dumb. There's no reason to put them in public. Like, what's the point of this? Like someone said, oh, well.
But so first of all, can you, in a nutshell, can you explain what Fannie and Freddie is for those that don't know, and why would Trump want to bring them public?
Okay, so Fannie and Freddie Mac, basically, they are before 2008. There's something called GSEs. Okay, government-sponsored entities. Essentially, what they do is when banks issue mortgages and everything else, Fannie and Freddie buys those mortgages. They create mortgage-backed securities, right? And then they provide insurance to cover those mortgage-backed securities. So essentially, what they do is they increase liquidity so that people can. So it's almost like the government acting like the insurer of last resort, so that this way people can get more people can qualify for loans, right? So this is why Fannie was created, to basically give people the opportunity to actually get loans, mortgages. Now the thing is, in order for Fannie and Freddie, they charge you a percentage in order to get those loans. So it's not like Fannie and Freddie are doing this out of goodness of their heart and this is charity. And like, no, they collect premiums. All of those premiums right now, Fannie and Freddie were technically nationalized. So all of those profits were going to the Treasury, okay, directly back to the Treasury. So we gave them money to support them during the great financial crisis. They didn't need it as much at the time. They worked through all their problems. And since then, every time they make additional money, it's been going back to the taxpayer. So it's not like, oh my God, Fannie and Freddie, like I don't understand what the reason to make them public again, other than there's a bunch of hedge funds that own like Bill Ackman that own a bunch of Fannie and Freddie preferred shares that basically are going to make a giant payday. I really don't understand what the point of taking Fannie and Freddie public is.
Okay, so last question for you, Kris. Here we got 4 minutes till the market opens. Do you think Bessent and Trump need to come out anytime soon and make a statement that gets the bond market to calm down? Bond market's not breaking, but it's definitely a bit uneasy. So two-part question: when do you think the bond market breaks, if it does, and does Trump or Bessent tweet anything that gets the market to relax?
I have a theory, okay, and this might sound like a really stupid theory, but I'm going to go with it. So I'll just explain it here. Right now is prime time for home buying. Okay. If you go out there right now, if you ask any realtor, they'll tell you the time that people buy homes is usually around April, May, June, July, and September, August, and September. Okay, usually September not so much because it's schools have already started. But if you look at May through August, prime time to buy a house. Right now, there's a crap ton of inventory coming to the market, and by keeping rates elevated right now, they're essentially keeping a lot of people from buying homes and jacking up shelter CPI. If shelter CPI comes down because interest rates stay higher for longer, they get their end goal, which is get inflation down. Right now, by not having all of those transactions happen, they're essentially hurting the housing market, right? Because now all of a sudden, all these realtors, they're not getting commissions. Construction has slowed down significantly on building new homes, right? All of these things are factoring in. And I have a feeling that they're really trying structurally to get housing CPI down. They tried the stock market, it didn't work. So now they're going for something that's a lot more illiquid, which is shelter. So my guesstimate, and this is just my guesstimate, I can't say 100%, is that they want a weak year of home sales, and then in September, October, they can be a little bit more on the what is that thing called? On the confidence side, get the cuts needed, and by that time, like most of that housing inventory will still be there, like and basically CPI will be much lower by then.
It is a theory. I mean, they tried to crack the markets to do this, and Trump even confirmed they tried to, crash them. He reposted this TikTok, and that would help get bond yields down. That didn't work. Obviously, this tax bill is not going to work. So it's going to be something where over the next few months, I think we're definitely going to have to see by July 4th, they want to get this officially passed. And, are the markets going to allow that?
I think what Trump has spoke about basically is they want to crash confidence, and the consumer confidence is down significantly right now. So while consumer confidence is down, that means that people may not be going out there to spend as much. So yes, tariffs should theoretically, boost inflation up a little bit. But if you look at core goods, which are what the tariffs would end up impacting, they haven't gone up at all.
Yeah.
And so I'll send you the chart to just show everyone in the WhatsApp. But once you see it, you'll be like, wait a second, what? And the biggest challenge right now is core services, like things like haircuts, things like like just general things. Those are the things that have been really causing a lot of the inflation that we have. So core goods is not a major driver of inflation right now.
Yeah.
All right.
All right, Kris. Appreciate you, brother. Thank you for hopping on and helping us understand.
Bye.
Talk later. All right, folks, here we go. We got a lot of other headlines to run through. 10 seconds. Let's see if the bond market and the lack of demand on that 20-year yesterday had any meaningful impact on the stock market today. And let's see how equities ultimately react as we get through another day of trading. It is Thursday, May 22nd. Thank you, everybody, for being here. The stock market is now open. All right, wake your ass up. Let's get into it. Robinhood opens up at 65.20. Although the markets might be down a little bit from that 20-year auction, Bitcoin's up, and Robinhood is very beta to Bitcoin. So that one might be helping this stock. 65.58 on Robinhood. That's up 2.6% on the day. NVIDIA, 132.69. That's green from yesterday's sell-off at 131. Rocket Lab, 24.82. That's down 1.2%. Palantir almost went below 120 in the pre-markets. It's holding on to 120 right here at 123.48. The S&P 500 opens up flat. It was down basically 2% yesterday. It is flat right now, not green or red. We are flat. HIMS opens up down 7% based on that Novo Cigna deal that was announced yesterday, and that's getting the market to feel that HIMS could have less demand based on if that deal goes through. That one's down about 7.72%. They also got a downgrade from Bank of America. Bank of America, essentially, if you read the report, they said based on our credit card data, we think sales are down year over year in Q2 for HIMS. That was kind of like the thesis of the report this morning. And that could be a reason why that stock is getting hit by about 8%. Dell right here is flat on the day. CoreWeave again continues to just be Incredible, up another 4%. I sold it at 105 yesterday, bought it at 98. It's at 110. They did an offering of $2 billion at a 9% coupon rate. Market didn't care. They said, all right, if you're going to dilute me, I'm going to just keep buying more. And CoreWeave up another 2% currently right now. Rocket Lab at 24.90. NVIDIA goes green, 132.67. Tesla at 34.38. SoFi 12.93, trying to get back up. If you're wondering why solar stocks are down, the reason they are down, Enphase down 16%, is because the new tax bill takes away the subsidies that existed for residential solar panels for residents inside of the United States. Solar Edge right here down about 22.9%. Now that's not law yet. It's going to get passed in the Senate, but if it does get passed in the Senate, and most likely than not, it's going to get passed in the Senate through reconciliation, solar panels are not going to get the subsidies that they had before. And that could be the reason the market is selling those off aggressively. It's funny because I mean, this is where knowing about stuff matters. Like if I was a Enphase investor, you would have to know that these solar panel subsidies are on the bill. And if you assume that the bill would get passed, you would have to like put two and two together and imagine that it would be bad. But I didn't even know about that. So I wonder how many solar investors actually knew this was getting passed today. And, if they didn't, then they're definitely getting surprised this morning by this sell-off. Microsoft right here at 455. Where is Bitcoin? Again, we did hit all-time highs yesterday at 111. We're basically at all-time highs right now at 111.553. Here's the chart I posted this morning on Bitcoin. This is like the most important thing I think to understand about what's happening with Bitcoin. In March of 2024, global Google trends worldwide, when Bitcoin was 70K, was hitting a peak, as you can see in that first red circle. The second red circle in May of 2025, significantly lower. It's at about 43 on the scale versus 100 on the Google Trends overall worldwide database. And Bitcoin's at 110K, 50K higher, or 40K higher. So I think this is not Coinbase. I think this is not Robinhood. I think this is not retail investors. Robinhood and Coinbase aren't even in the top 200 in the United States App Store. This is not Google Trends across the world. This is not your cousin that you haven't talked to in 2 years texting you about, hey, if they should buy some Bitcoin. I think these are the Saudis. These are the Chinese. These are hedge funds, maybe that are hedging with Bitcoin against their bonds. Like these are big money institutions that are giving Bitcoin a bid at 111. I really don't think it's retail. We would just see more data, and maybe we'll see more data in the coming months. Maybe retail now starts to FOMO, and that's when we start to see it tick up. But I think this run on Bitcoin is actually really exciting because it's not going to be retail investors that would sell it. It might be long-term institutions that are holding it with an actual thesis. Robinhood right here, 64.95. That one got a red candle right at 65.50. Got rejected at that level. Palantir 122, Rocket Lab 120 or 24.37, NVIDIA 132, and then Tessie at 332 currently right now. NVTAs, Navitas. The reason that was up 200% is it's still up. It's up 154% is because they're partnering with NVIDIA. They're partnering with NVIDIA for their HV800 data centers. That was announced yesterday. This stock was at $1. Now it's at $4.80. So the market is very excited. And if you were in that one, congrats. If you're going to chase it, you just got to be careful if you're chasing it. But the NVIDIA headline is what got the market excited on that one. Nebius was up 5% yesterday. That stock is down about 2% currently right now. TLT is getting demolished. I have 15 TLT calls for $100. January 2026, maybe there's a chance we can get to 100, but we would need an aggressive cutting of rates. And at this point, I think if we have an aggressive cutting of rates, it's because something bad is happening, not because Jay Powell sees inflation coming down. So TLT 83.45. I mean, I want to say yields are topping, but then again, I thought the 10-year was topping at 4.3 and we're at 4.593. So who knows? Who knows when this thing actually begins to top? Where is HIMS? Are we getting hit on HIMS again? That Cigna update today, HIMS down 9.6%. Okay, who's buying the dip on HIMS? Who's buying the dip on HIMS? Where's Target? Target is up 1%. That's recovering a little bit. SEP is pumping. That's the Cantor Equity Partners. That's up another 10.8%. Bitcoin going up. That definitely can help. I bought calls on TLT. I didn't sell calls. So those, I was being more of a gambler versus the house. And as usual, the gamblers tend to lose, which I'm losing at right now on those calls. SMCI, that one's flat, 41.70. It was at 46 this week. Rocket Lab, where's Rocket Lab? Getting hit 3.7%. I don't think there's any reason Rocket Lab's going down other than it's a high beta growth stock, like a lot of these names. And I'm surprised with how the market's doing already 5 minutes into the day. I mean, the S&P 500 is basically flat. Some of these growth stocks are down maybe 3 to 4%, but that's really nothing given the reaction we got yesterday when that 20-year bond auction didn't go as the market expected. Right now, the market's kind of fading it. The market's like, it's not that big of a deal. Tesla's down 0.05%. I mean, like super high beta growth, Palantir's green is not reacting to any structural credit crisis because right now there isn't one. And hopefully there isn't one in the future. But for any of the bears that thought the 20-year bond auction would create a massive sell-off on stocks, as of now, that's not happening. And we'll see later in the day. But as of now, it's not being super, super aggressive. The reason HIMS is down, though, is because there's a HIMS-specific news that is affecting that name. And again, I said this last night underneath the post that HIMS House made. I said, first of all, the reason it's down is probably because I went on the podcast. So that's an easier reason to explain why HIMS is down 10% right here. But this is why I don't own this stock. I cannot really explain to you in any sort of intellectual capacity why this stock is down. I don't even know what Cigna is, bro. Like, it's a drug, it's a company. I have no clue. So if I can't explain this stuff, it's hard for me to own it. And you could say, oh, well, you should just own it because it's undervalued. It's like, sure, but if it's an investment and not a trade, because if I trade it, you guys are gonna get mad at me, like when I sold it at 40, then I need to actually know about it. And I don't know anything about this, to be honest, bro. Cigna's a health insurance company. See, I didn't even know that, dude. This is why I don't own it. I wouldn't feel comfortable owning it if I don't know literally anything about this thing. Tesla right here at 335. That's green. Go learn, then emit. Well, see, there's only so much time in the day, right? That's the thing. It's like, if I really need to take time to learn it, and if I do, I think it's going to take some time before I say, yep, I know everything about understanding the dynamics of health insurance. The other thing I said on the podcast, for those that watched it, I got burned by a biotech. Like, I blew up my account back in 2020 on a biotech. And 2020 was one of the greatest bull markets we had in because of the COVID stuff. And I'm over here blowing up my account and Tesla's going to the moon, right? It's like, that's how bad I was in 2020, just that understanding the markets. And so I've always stayed away, or I've always had hesitancy around pharmaceuticals and bios, and because drugs, I just don't know enough about it. And yeah, obviously that's my own ignorance, but also that's just, the nature of my experiences in the market. Dude, that Knicks game was crazy. The Knicks were up by 50. I'm in New Jersey. I'm basically in New York, okay? Some of the New York people in the chat's going to get pissed off by that. I'm basically in New York, 15 miles away in New Jersey. And we were up by 15 with 2 minutes left. Goes to overtime, and then we lose. I mean, that was bad, bro. That was not good. That was bad. That was very, very bad. Shout out to the Pacers, though. Shout out to Indiana. You guys did your thing. Google right here is also doing their thing. 171, 1.63%. So nice to see from Google actually holding on a pretty, relatively flat day. Google continues to go green. So maybe we're done with the 160s and 150s. Maybe the market is not going to think of Google as a dead company. Grab right here, still getting hit from those Indonesian protests, and the broader market's down. That's at 480. AMD right here at 111. But Google, one of the best performing Mac 7s today. Meta is down. Microsoft's down. Apple, we got some big news on Apple. We'll talk about. Microsoft just went green by about 1%. Apple continues to be red, 201, $1 away from going below 200, based on some bearish news that came out yesterday with OpenAI that we'll talk about in a bit. UNH is pumping. Okay, UNH was down. Oh, so we have an update on UNH. So they fell yesterday with the Guardian article accusing them of paying hospitals to not admit as many people to reduce their premium. So that took them down 5%. Then after hours, Andrew Whitty, who was the former CEO who stepped down in early May, he now stepped down from the company entirely. He's not even a director. So not only is he not the CEO, he's not a director at the company anymore. And some people are saying, hey, they're trying to get him away from the problem, or maybe trying to use him as a scapegoat because, maybe there's some issues with what he did when he was running the company. And that affected UNH. Now, it is green from the 291 lows. So you're at 299. So it has a little bit of a pump right here, 1.3%. Up from the lows, but still down 1% overall on the day. Down 8% from yesterday. SPY 533, 553 put on $624 million spike. Okay, so that is an option flow sort of like unusual pattern that we're seeing right here. $4 million on the S&P 500 553 June 20th put. Again, that could also just be hedging by someone, but that could also be, hey, they think the S&P is definitely going lower by June, and they're buying some puts to capitalize on that. So that's June 20th. I'm going to pull up that option chain right here, 553. Yeah, I'm looking at the flow right now. That's $4 million. $4 million of a 553 put. S&P's at 582, 553 would be what? How much down is that? That would be a 5% decline, basically a 4.9% hit in the next month. Okay, here's the question. Let's do first question of the day. 5% up or 5% down on the S&P over the next month? 5% up or 5% down on the S&P over the next month, which would put us at what? June 20th. That would put us at June 20th. By the way, I think we get PMI data really soon. Initial jobless claims were really good, or like not really good, but they were better than expected. We expected 200,000 or 230,000 jobs to be lost. We lost 227,000. So that is nowhere near recession levels yet, which is actually not good for the labor market because, that doesn't help us get a rate cut anytime soon. But that is good for the overall economy. All right, I just put the poll in the chat. 5% up or 5% down. A 5% up move would put us at 612 on the S&P. 5% down will put us at basically 550 on the S&P. S&P just went green, 583. There you go. Just going slightly green. Palantir is green. Rocket Lab's trying to go green, but that one's down 4%. Nvidia is green, 132. Robinhood 64.60, Tessie 335, Amazon 201, Meta 634, Baba's down a little bit, VIX is up about 1%, 2106. TLT continues to go down. Where's our 20-year? Our 20-year still spiking at 5.123, and our 10-year flat on the day, but still at 4.589%. HIMS continues to get hit, down 11%. Again, this is literally one of the most volatile stocks in the market, so and it's still heavily shorted, so we might see a little bit more pain, but I think we'll see a bounce eventually. Question is, when some of these dip buyers step in. Okay, so the global M2 chart you guys are saying to pull up. So I'll pull this up right here. This is another reason why Bitcoin's probably going higher. And it's kind of a more obvious reason for what's going on with Bitcoin. So again, Bitcoin tends to follow the money supply. That's what M2 is. And if you look at the money supply right here, it is inching higher. That's in black. The red is Bitcoin. And based on, if you take this to its logical extreme, you're going to see Bitcoin at around a range that is, closing in on 150. I know it sounds kind of crazy, but that's where the trajectory is headed if you follow that M2 money supply chart. And again, M2 just refers to liquidity, right? There's more liquidity out there into the world. If the Fed has to start buying our bonds, which they're not going to do, but if they do that, then that would obviously turn on the money printers as well. So there's a lot of different catalysts for how Bitcoin could continue to go higher. Now, Christopher Waller, he's one of the Fed presidents. Here's what he said today. If tariffs settle down, the Fed could be in a position to cut in a latter part of the year. I feel like this is exactly what people have been talking about, right? Which is this idea that if Trump comes out and says, hey, we're going to take down these reciprocal tariffs, and maybe we'll keep China at 30%, but we'll take Vietnam to 2% instead of 10%, then that can overall decrease the average tariff inflation rate or the average tariff rate, and that could decrease inflation expectations in the Fed. So Christopher Waller, who tends to be a dove, not a hawk like Kashkari, he said, hey, there's a chance we could really cut if tariff expectations come down, but that would mean Trump has to capitulate. And, we're just not going to be sure if Trump does that. Yes, Google is above the 200-day moving average. That's a great call out right there. Wow, 172.80 up 2.5. It was under 150 last week. 173, there she goes. This is very encouraging on a day like this. It's not like everything's pumping like it was yesterday. This is just like the market saying, hey, we're starting to remember that Google is freaking Google. It's not eBay, as Mr. Gene Munster said yesterday. And maybe we want to allocate to Google. Okay, PMI, did we just get it? We just got it. PMI comes in at 52.1 versus 50.6 on the global. Global PMI comes at 52.1. That's good. That's a beat. That's expanding versus contracting. The forecast was 50.4. The previous was 50.6. That's actually a really good beat, dude. 52.1. We're going to get manufacturing and services in a second, and then we get existing home sales in 15 minutes. Let's see on services and manufacturing. Services comes in at 52.3 versus 51. That's a beat. Manufacturing, wow, comes in at 58.3 versus 50.3. That is a beat. Below 50 is contracting. Above 50 is expanding. These are just metrics to understand if the economy is going higher. Oh, wait, that changed. Oh, they changed that. Did you guys see that? That number is 52.3 on manufacturing. That was 58 like 3 seconds ago. That was 58. Now it's 52.3. So the expectation was 50.3. Now it's 52, which is good. Still a beat. It wasn't at 58 though. That number changed in like 3 seconds. But manufacturing for PMI 52.3, services 52.3, both the same. And then global composite at 52.1. That number also changes slightly ahead of expectations in the 50s. You guys saw the typo, right? That's why I was like, whoa, 58.3. Okay, so that's good. Where's the markets? That's not bad. That's bad for inflation because it means growth is still good. And we can't rely on growth slowing down for inflation necessarily to come down. We can, rely on oil and other stuff like that, but not necessarily just pure growth. But it's definitely strong for the overall sector of the broader economy, right? The S&P 500 right here, just slightly down on that news. It means that there's plenty of jobs. The initial jobless claims also gives us that data. And it means that there's willingness to spend in terms of capital spending, which we'll hopefully see through M&As and IPOs. And Jay Powell can't point to the labor market, at least not on this data, to get upset. I think we get jolts next week as well. So we'll take a look at that. Tesla right here at 335, Robinhood at 64.48. UNH goes green on that news. UNH is, look at that, 304. So I guess the director stepping down yesterday, that market sold the news after hours. Now the market doesn't care. And broader PMI safety is bringing the UNH up a little bit. I mean, UNH obviously is massively undervalued. Like we all know it's undervalued. It just has headline risk. So any piece of good economic news could also just be a catalyst where money finds the most undervalued names in the market and then aggressively accumulates if we're in the clear with decent economic data. Google, wow, 173.5. Are we going for 174? No, never mind, 173.9. No, we did hit 174. There it is, 174 on the Googs. Dude, are we going back to 180? We belong at 195 in my opinion, and that's a conservative 21 times 2026 estimate. So, and that would get us at 195. That easily gets us at 195. That would not be crazy. Googs right here at 174. Class C should already be at 175, right? Goog Class C is at 175.8. 175.8. Yeah, dude, the market's fading this 20-year bond thing. Yesterday, that was the reason for why markets went down. 20 years still spiking, 5.13. But the market doesn't care. And logically, this is just kind of my opinion on this, and I think it kind of makes sense. If people are selling bonds and they're not afraid that the economy is collapsing, they're going to buy something because they're definitely not letting their money stay in cash. And even though we do have $7 trillion in cash, they're either going to buy gold, Bitcoin, real estate, or stocks. And real estate is, you could argue, a bit expensive right now given where rates are. Gold actually selling off this morning, 0.23%. And so what do you have left? You have growth stocks. You have a Google that is pretty damn cheap, even at 175. And you have a Bitcoin that I don't know if it's ever going to be cheap or expensive, but it is Bitcoin. And potentially it is that hedge that people have been looking for. So maybe that's kind of what's playing out right here. Chris said, look at what I sent you on WhatsApp. Okay, let me pull this up. This picture is actually, this is one of the other reasons why the bond market is still upset right here. PCE inflation, unfortunately, continues to remain a bit elevated. And the bond market doesn't know what to do with it. There you go. So you can see right there, PCE inflation, there's core services, which is kind of the thing that the market really looks at. Energy, headline, core goods, food. But then you see housing is starting to come down a bit more. And this is what Chris has been talking about as well in regards to rents, especially in the South. We're going to get new home sale data in 10 minutes. So that's going to also solidify how much the housing market is either showing that people are on the sidelines or people are ready to deploy capital and end up buying a house even at 6.92% mortgages. But that is the major thing that I think would be unlocked if we cut rates. But we're not there yet. We are not there yet. By the way, the probabilities on cutting rates, dude, this thing just keeps going lower and lower. It's at 5.2% now for June. And for July, it is at 29%, which is better than, it's better than what it was in May. But still, it's like, it really does not feel a rate cut is coming before September. And that means we might not get a cut in August. And August is Jackson Hole. And that's like a important conference that Jay Powell talks at every year. Not getting a cut before Jackson Hole would be very similar to 2024. In 2025, that's when we ended, or September 2024 is when we ended up getting that first cut. because we waited 9 months into the year. Trump did tweet about the big, beautiful bill. It's a long tweet. He tweeted about 20 minutes ago. Basically, he just said that it's going to have massive deductions on American vehicles, no tax on overtime. It's going to create better funding for ICE and security measures. And he says, they, I'm assuming referring to the Democrats, don't realize that these things and so many more like them will never again happen if we protect our country with the big, beautiful bill. Okay, cool. So there you go. We're going to get it passed through Congress. It's just a question of how the market is going to react once it actually becomes live. And I don't think we officially know what exactly the market's reaction is going to be. Apple right here. I think we need to talk about Apple. 200.63. 200.63. Why is Apple getting hit the way that it's getting hit? By the way, Palantir going green right here. 120. Oh, wait. Can we talk about Palantir first? Can we talk about Palantir? For those that missed the news yesterday, Palantir got a $795 million, you heard me right, $795 million extension for their Maven contract with the Army. So the $450 million extension or initiation of the contract happened in May of 2024. This is a modification on top of that to $795 million. When you put those two together, this is Palantir's first $1.275 billion contract for Palantir. So it's the first $1 billion contract ever that Palantir has received from the government. Now, the stock, it's up a little bit right here, but yesterday after hours, the stock didn't really react because obviously the stock is still trading at an aggressive multiple. We really need these deals and more to be able to hold a almost $300 billion market cap. So this stuff for me is just what we were supposed to do. It's not something new. It's not something I expect to get the stock back to all-time highs. It's rather, hey, the multiple's aggressive, but look at these contracts, right? It's like every time you point to the aggressive multiple, you also point to who else is getting these types of contracts. And these contracts are sticky. They're going to get renewed in the next 5 years for even higher levels. And they're going to open more doors into the government, which should continue to accelerate that 45% year-over-year government growth in the United States. And that's why I think Palantir is kind of maintaining its momentum currently right now. So congrats to Palantir. Big deal. First $1 billion contract from the government. Google right here, 175. Speaking of Google, the reason Palantir even is able to get this $1 billion contract, which $1 billion is pennies to Google. But the reason they're able to get it is because Google rejected the Maven project in 2018 because there were internal petitions at the company of employees who felt it was unethical to work with the US government to help them with autonomous warfare. And so Google rejected it 7 years ago. Palantir swooped in and said, we'll take it. And that's why Palantir is getting these contracts currently right now. So that's what we got. All right, Apple. Let's talk about Apple. So this video came out yesterday, and that is why Apple is down about 2% on the day. This is the most underrated news of the past 24 hours because the bond market's kind of, got everyone to think about other things. But this is a big deal. This is a really big deal. OpenAI bought Johnny Ive's company, which is called I.O. And Johnny Ive was the guy who designed the iPhone, the iPad, the Mac, the watch, all the stuff at Apple. He left 6 years ago, started his own firm. Sam Altman has been working with him for the past 2 years. They're now building hardware devices for AI. And they're saying, we're not just going to be an LLM company. We are going for everything.
Has just completely captured our imagination.
Johnny called one day and said, this is the best work our team has ever done. Yeah. I mean, Johnny did the iPhone. Johnny did the MacBook Pro. I mean, these are like the defining ways people use technology. It's hard to beat those things. Those are really wonderful. Johnny recently gave me one of the prototypes of the device for the first time to take home, and I've been able to live with it. And I think it is the coolest piece of technology that the world will have ever seen.
Notice he said prototype. They already have something. I didn't know they had a prototype they were working with to be able to build some hardware, a device that can live on side of the ChatGPT application layer, but they're already working on this is probably why Masa-san from SoftBank gave them $40 billion. Like, remember when we were talking about that? In my opinion, was like, hey, they have to have something we don't know about because it can't just be a commoditized LLM. There has to be a reason Masa-san's putting in $40 billion at a $300 billion valuation. It's probably because they said, hey, we have a hardware device that's going to rival the iPhone. And it looks like, hopefully in the next year and a half, we're going to see what that looks like.
The products that we're using to deliver and connect us to unimaginable technology, they're decades old.
Yeah.
And so it's just common sense to at least think, surely there's something beyond these legacy products.
We have like magic intelligence in the cloud. If I wanted to ask ChatGPT something right now about something we had talked about earlier, think about what would happen. I would like reach down, I would get out my laptop, I'd open it up, I'd launch a web browser, I'd start typing, I'd have to like explain that thing, and I would hit enter and I would wait and I would get a response. And that is at the limit of what the current tool of a laptop can do. But I think this technology deserves something much better.
So, I mean, we're going to see, bro. A lot of you guys are saying it's humanoids. You know, I was talking to Derek about this last night. Derek also thinks it's a humanoid. Derek thinks it's some type of a robot. Granted, Sam Altman said he took it home with him last night, so I don't know if he took home a robot, but like maybe it's a robotic thing, but it might not be a literal humanoid robot, but it's some type of robot. A lot of you guys are saying glasses. Could be glasses as well. Maybe they're going to be working on like a real version of a Apple type of glass now that they have Johnny Ive, who is the guy who designed all the great Apple products. Maybe Apple can't really execute on glasses because whoever the hell designed the Vision Pro was not Johnny Ive. I don't think he would have approved that product going into market. So, and OpenAI has been rumored to work on humanoids for a while. So I wouldn't dismiss the potential of it being a robot. Maybe that prototype is not going to be a robot, but they're working on hardware, baby. They're working on hardware. By the way, Googs 176 up 4% on the day. Google finally getting the love and respect that it deserves. Let me check on some of these calls. S&P just went green. My calls on the Googs, we're up 20% today. We're up 50% for the week, dude. Not bad. These calls are now only down $4,000. They were down like 10,000. So there you go. We're climbing back up there in the ranks. But Google right here at 176, not bad. Again, this OpenAI thing, technically it affects Google too. So the market kind of overlooking what it could do to Google. But more importantly, it affects Apple because Google doesn't really make their money off selling devices. They make their money off selling search, right? Ads. Apple, 45 out of the 90 billion they do every quarter is the iPhone. Now, granted, I'm pretty skeptical of a new device that can replace the iPhone. Like I'm really skeptical of glasses or anything like that. But then again, Johnny Ive, that guy is a design genius. There's a reason Sam Altman paid $6.5 billion for him. He basically bought him, not even they bought the company, but like realistically, they're buying Johnny Ive here. And, they might realistically have a chance to dethrone Apple if they build a device that consumers actually love. I think it's going to be hard, but this is why people are investing in OpenAI. I mean, the fact that the OpenAI private stock in the secondary markets are going crazy because people are just looking at what's happening. They're looking at GPT's growth, almost 1 billion users, and they're saying, dude, how do we not seriously get excited about this? By the way, for NVIDIA, let's say glasses that OpenAI releases do take off. Let's say 1 billion people buy their glasses. Those glasses are going to not literally need GPUs. Who knows? Maybe there's GPUs in the glasses, but those glasses are going to be connected to LLMs, which means there's going to be more queries. And because of more queries and more reasoning, there's going to need to be more compute, which means there's going to need to be more chips. So that entire semiconductor ecosystem, if OpenAI succeeds with some game-changing product that isn't the iPhone, it's bullish for NVIDIA as well, which is another way to get some type of exposure to OpenAI. Wow, ASST is up 45%, dude. This is Vivek Ramaswamy's I don't even know what you want to call it, asset management firm, I guess, that he took public. I don't even know what they own in it. I think they own some Bitcoin. I know their kind of strategy is going into this Bitcoin treasury stuff, but I don't think they actually own assets in it yet. They haven't like deployed capital. So this seems to me like a lot of hype that's getting this one to run. By the way, Fannie and Freddie, Trump said yesterday he wants to take it private. Fannie and Freddie stock up 34%. At least the preferred shares. So Fannie and Freddie right there, 33% up based on Trump's announcement. All right, home sales data. We should be getting that soon. Existing home sales, we got it. 4 million. 4 million on the home sales versus 4.05 expected. Month over month declined at 0.5% or negative 0.5%. The market thought it would increase at 0.7%. So you have a miss on the top and the bottom when it comes to home sales. Market thought it would be positive on the monthly. We came negative, and we thought we would get about 50,000 more homes than what we actually sold. That's not that bad. I mean, it's oh, those are the common shares. That's right. Those are not the preferred shares. Those are the common shares of Fannie and Freddie. But it's not as bad as I think what people are thinking of the housing market, but it also is I think the third month in a row of sequential declines. S&P going green right here, up 0.3%. So S&P leaving the red, at least for now. Let me check Lennar, some of these home builder stocks. Lennar, that's down about 1%. DR Horton, how about that one? Or DH Horton. What is the ticker for that? DH Horton. DR, that is DHI. That stock right here is also, are we down? Yeah, we are down about 0.6% in the home builders. Amit, are you buying HIMS? No, not yet. It's going to go to 65 and everyone's going to be so upset that I didn't buy it. Dude, I just don't know enough about this company. That's all. I'm very happy for people making money in it, but I don't know enough to actually meaningfully care about buying it. So it is what it is, dude. If it goes to 100, it goes to 100. I'm happy for everybody. I don't really care. You don't need to own everything. Now, if it gets even juicier than at 54, I'll get excited, but I don't know. It's not something I meaningfully want to pay attention to every day. Tesla right here, 340, Robin at 65.22. Although I should pay attention to it every day because in the chat, you guys are spamming him. So I might as well be forced to pay attention to it. Palantir, 124.73. That's up 3.3%. And then Rocket Lab trying to make his way back to 25. Dude, we're recovering. SoFi's back at 13. Meta's back at 640. Amazon back at 202. Microsoft 450. Microsoft's up 1.5. MicroStrategy 413. Saylor did announce more dilution today. That's why MicroStrategy is not going to the moon. But MicroStrategy is green. Even Grab. Holy crap. Even Grab at 2%. Wow. Markets do not care about this stupid 20-year bond. They're like, you know what? We are going to buy stocks. Amit ask the question. All right, here we go. Let me ask the question. You guys know what question I'm going to ask. By the way, the last question, 5% up. 64% of you said 5% up. 64% of you said 5% up. All right, here we go. Here's the question. Do you trust the green? Do you trust the green that we're seeing right now? Kraken to launch tokenized US stocks for global users. Okay, so this is why Robinhood is focused so much on this, bro. It's happening way sooner than I thought it was going to be. Wow. Apple, Tesla, and NVIDIA shares to trade as digital tokens on crypto exchange Kraken. The platform will offer overseas customers tokenized versions of more than 50 stocks and ETFs. Dude, I really think this is what Robinhood's going to announce in their France event. If Kraken got permission to do it, Robinhood is a little bit more under scrutiny because they're a brokerage as well in the United States. That's probably why they sent that letter to the SEC for permission. But this is going to happen soon, bro. This is why I also think Robinhood's holding the mid 60s. It's like, think about the amount of growth they can get if across the world, anyone can download a Robinhood account and buy a tokenized version of Apple via Hood, and they don't have to have a US bank account or a US brokerage account. Now, a lot of people are asking, well, why is that better than just buying, Apple shares inside of their country on their brokerage account? And there's a lot of nuanced reasons to it, but the number one reason is settlement and clearing costs that might be significantly cheaper to buy the tokenized version of it versus the actual share itself. What does that mean from a regulatory perspective on how you get liquidity and do you actually own shares of the company? I don't have the answers to that, but this space is definitely moving at hypersonic speeds. And Robinhood, Vlad wrote an op-ed about this in January on the Washington Post about how we need to tokenize assets. Larry Fink's been talking about this for about a year and a half. Jamie Dimon talked about it the other day at the Investor Day for JP Morgan. So this is coming. This is absolutely coming. And I think Hood knows this, which is why they're trying to get at the start of this as well. So we're going to see kind of how that plays out. QBTS, Quantum, getting some love again, up 8%. This was down yesterday, like 5 to 7% after hours because the CEO sold 1 million shares. But I don't think the market cares that much about that. So CEO insiders took some profits, but nonetheless, stock right here up 8.5%, getting some love and some momentum. Palantir right here at 124. Google at 176. There you go. High today was 176.39 on Google. 176.39 on Google. Yeah, 24-hour trading. That's another reason. That's the biggest reason I forgot about. 24-hour trading is another reason people would love to have a tokenized version of Apple versus Apple itself. And it looks like the future is going to be 24 hours, dude. The NASDAQ, the New York Stock Exchange, all these guys will adjust to it over the long term. Are bond yields coming down? They're slightly coming down. 4.58. This was 4.59. Now you're at 5.109. This was at 5.147 on the 20-year. Getting a little bit of it coming down, which is good. That means credit markets kind of stabilizing. I mean, I hesitate to say stabilizing, but at least you're getting a bid on some of these bonds. Alphabet right here, 176, Palantir 124, Rocket Lab 25, Rocket Lab back to that 25 range. Rocket Lab doing a really good job holding 25, and then Amazon at 203. Let's look at the semis. All of them are green. Dell, Lam Research, AMD, Micron, ASML, SMCI, all of them going green on the day. TSM is green as well. Yeah, the market's saying we don't care about bond yields. We care about AI. We care about the infrastructure for AI with NVIDIA kind of leading the way. So does tokenized mean you can indirectly buy USA stocks without doing KYC? I believe so. I really don't know all the nuances of it. I thought this was years away. I thought this was some big thing that was going to take so long to get to. Apparently not. Apparently it's happening sooner than we thought. So I have to do a lot more research on like what it means for why people would actually want to buy the tokenized version of these stocks. And I don't think it really matters for people in the United States, right? Because we have so much access to the liquidity and brokerages. But across the world, people that have to go through stuff to be able to get US exposure, I think for them, it's a bigger deal. And that's why maybe Robinhood's doing the event in France, because they're launching whatever thing they're launching in Europe in particular. And that's where I think it's going to have a lot more of an implication. Also, we had that stablecoin legislation passed yesterday with the Genius Act, which could have been another reason why Bitcoin caught a bid. And that should only make it easier to be able to tokenize assets and actually peg it against something that now Wall Street has more regulatory clearance on, given we passed that act yesterday. So there's a lot of good ways to kind of think of this going over the next 5 years. Where is Ethereum? Bitcoin was pumping. Ethereum almost 2,700. That one as well, getting some momentum. Is CoreWeave still pumping, dude? Why did you guys let me sell CoreWeave, dude? 112, still up 5%. Everyone was like, take your profits, $7. You can buy some coffee. Well, could have been $15. And now we're here. Robinhood, $65.99 currently right now, or sorry, $64.99, trying to break back at 65. Let's get a little bit of an update on some of these other headlines along with NVIDIA, and then we'll keep going from there.
Good morning, Sarah. Well, tech giants are uniting to bring AI infrastructure to the Middle East. OpenAI, SoftBank, Oracle, NVIDIA, and Cisco announcing right now the creation of UAE Stargate, which would be a 5-gigawatt AI computing campus in Abu Dhabi.
Holy crap. UAE Stargate. We have a Stargate in America. That was the $500 billion stuff they announced back in January. Now they're announcing UAE Stargate. That's probably why NVIDIA is catching a bid right here. NVIDIA up almost 2%. There you go. Dude, forget the 20-year. AI, baby. AI. That's what the market cares about.
Actually be the first international deployment of Stargate, which is OpenAI's largest data center here in the United States, building in Texas. The campus, though, in the UAE will be built by Emirati firm G42, with 200 megawatts expected to go live in 2026 and operated by OpenAI as well as Oracle. The UAE will become the first country, according to the release, in the world to enable OpenAI's ChatGPT nationwide. NVIDIA will be supplying its latest Grace Blackwell systems needed to run these large AI data centers, much like...
Dude, this is so freaking bullish. ChatGPT nationwide is going to be released, and data centers are going to be developed inside of the country to be able to enable even more applications on top of it. This is insanity. They're talking about 5 gigawatts, 2026. It's ready to go live, at least with 200 megawatts of that 5 gigawatts. This is incredible.
Like it announced with Saudi Arabia just a few weeks ago. But this Middle Eastern expansion really signals a notable policy shift from Washington. Until recently, companies like NVIDIA, AMD required special U.S. licenses to export advanced technology to countries like the UAE or Saudi Arabia. Why? Because of concerns that the technology would eventually land in the hands of China. G42, the company operating this Abu Dhabi data center, did have close ties with China, but according to an American think tank, a CSIS report from just this past January, Emirati officials claim to be decoupling from China in AI. Notice they use the word claim, divesting Chinese investments and removing China-made equipment from its other data centers in the country. we're not expecting major stock reaction perhaps just yet. I did break this news last Friday. We're getting it officially right now. And a lot of analysts just over the last 2 weeks have said that most of these Middle Eastern deals have been priced in, especially because they lack specific details on how many chips, the specific construction timeline, but nonetheless news for this hour. Guys?
Christina, thank you. Christina Partsenevelos.
So she is right. They did talk about this last Friday. That's why we had markets kind of go crazy last week, but it wasn't confirmed, right? There were no specific details on it. Everyone's been saying, oh, the Saudis have committed $2 trillion, but we don't know if it's going to happen. Now we're getting real solid frameworks to be able to say, no. They are officially getting ready to invest. They are planning out how many gigawatts. They're planning out how many data centers they need. Like, it's becoming more of a reality versus just the commitment of trillions of dollars, at least in the UAE for this one. And NVIDIA is not, going crazy right now because that's definitely was priced in last week, but still very nice to see those commitments coming through. So exciting stuff in the semiconductor space. Robinhood 64.73. GameStop, dude. Can we talk about the fact that GameStop was supposed to be the meme stock that, made a recovery? And there have been I think at least 10 different meme stocks, whether it's Fartcoin or MetaPlanet or Newsmax or Webull, that have just done so much better than this. Like, if you're a GameStop bull and you've been hoping for a Roaring Kitty or something, or AMC, right? The original meme stocks to get their momentum back. There's just been so many other meme stocks to be able to bet on. Tesla right here at 339. And it's just, and GameStop, again, they had a chance to buy Bitcoin. They have $4 billion. They had a chance to buy Bitcoin in May of 2024 when it really started becoming evident that we were in a bull market. And Ryan Cohen didn't do it. He didn't do it. So it really just never got a shot to take off. Even after Roaring Kitty tweeted and did that awkward live. Do you guys remember that live stream when it looked like he had a gun to his head from a lawyer? He kept saying, this is not financial advice. It's just so weird, bro. And nothing happened. Nothing happened as a result of that for their stock. S&P going a little flat right here. It was up 0.4, now it's up 0.15. So a little bit of a red candle, but still holding on green for the day. Where's CoreWeave? This one's going to keep making me regret my one share sell yesterday. 110. It's up 2.5. It was up 4. So that one also getting a green candle. PC Apu is up 1.58%. So this is Pompliano's SPAC. PC Apu. I don't know why they named it that, but they named it that. It is up a little bit today. How much is it up? 2%, 1.5, 1.68%. I think he's already made $50 million based on it going to $10 because they invested at $1, or like 45 million or whatever the difference between how much he invested versus the market cap. So he's already up, a good chunk of money. Obviously, they have to go find a company to invest this in order for it to play out long term. But that's why people love SPACs, right? Or that's why Chamath was sponsoring all these SPACs, because you invest at 1, it goes to 10. If the SPAC works, it goes to 20, maybe 30. You make a ton of money, you dump it, and let retail hold the bag. I mean, that was basically the framework back in 2021. Yeah, grift galore is another way to categorize it. I don't know, dude. We'll see what Pomp invests in. I have low hopes that there's going to be any meaningful company that is so juicy that they would need to go public via him. Because again, one of the things he talked about on CNBC yesterday was like my brand. He was like, I'm putting my reputation on the line. Any company that needs his reputation, I'm not saying he's a bad person. I'm just saying he's like, he's a crypto guy. It's like to need someone's reputation to help grow their business from that ecosystem, to me, I don't know if it's going to be the most juiciest company in the world that people are going to be begging to get shares of. And so I'm just, I'm questioning who the hell are they actually going to invest in the first place. Wasn't Rocket Lab a SPAC? Yes, Rocket Lab was a SPAC, I believe. That one was dead for 3 years and then it came back to life. SoFi was a SPAC. SoFi, I know, has been not doing well in terms of performance, but SoFi, the company, is growing very well. I think its performance is less because of it being a SPAC, more because of just like the market not thinking it's a tech company. But the ones that really failed were Opendoor. That one got demolished. Virgin Galactic, that one got destroyed. And, these kind of innovative ideas just weren't ready for the public markets. And they came to the public markets, but they did not survive in the public markets. Thoughts on Halliburton? I've heard of this name. I don't know enough about it. HAL. $16.9 billion company. Yeah, it's an energy. I just don't know enough to talk about it, but I heard about the name like a month ago. Someone mentioned it. It's an energy company. Year to date, the stock is down 30%. Multinational corp for the world's second largest oil service. I'll ask Steve about it. I'll ask Steve. He'll probably know a lot more about Halliburton than myself. And we can get his thoughts on it as well. They're an energy services company. All right, Chris, are they good or bad? Where's VG, by the way? They had a good earnings. And that stock was up. And yeah, it's basically holding where it was after earnings. Dude, Grab, again, the reason I think Grab is getting a little bit of a pump right here is because that Indonesian whatever strike, it's a nothing burger, right? So I think if it was down on that, then it was bound to come back. But the acquisition is the only thing that matters now of GoTo. And I think we are getting closer and closer to that being real. 123.57 right here on Palantir as well. We saw home sales. I don't think home sales is the reason we're selling off. If we are getting any red candles, home sales was, not the best, but I also don't think it's the worst thing in the world. I think it's just general algorithms and market volatility here right now. Here's the actual home sale coverage. Let's get to that right here. And then we'll go from there.
Let's get to Diana Olick. Hey, Diana.
Hey, Carl, that's right. Existing home sales in April fell 0.5% to a seasonally adjusted annualized rate of 4 million units. Even sales down 2% from April of last year. The Street was looking for a gain of 2.7%, and this is the slowest April sales pace since 2009. This count is based on closings, so contracts signed in February and March before mortgage rates moved higher. Inventory jumped 9% month to month to nearly 21% from a year ago. 1.45 million homes for sale at the end of April, which at the current sales pace makes a 4.4-month supply. That is the highest supply in 5 years. More supply is starting to cool prices. The median price of an existing home sold in April, $414,000, up 1.8% year over year. Both the South and West regions did see prices fall. Now, homes were on the market an average 29 days, faster than March, but longer than April of last year. First-time buyers accounted for 34% of sales, a surprising gain. And activity is much stronger on the higher end of the market. Sales of homes priced over $1 million, up nearly 6% from a year ago. Those priced below $250K dropped over 4%. And Carl, one more note, the cancellation rate in April was nearly twice what it normally is. And the Realtor's chief economist says that may be due to the drop in the stock market.
All right. Lowest April percentage gain since 2009. Obviously, the housing market is slowing down, even if it's not slowing down as aggressively as it was in January. And you look at it on a year-over-year basis, going back to the monthly sales data from a decade ago, it's down. And so rate cuts, I think, are the only thing that really unlock this market in a meaningful way. But again, it's not like, so the market wanted 4.05. We came in at 4 million. It's not like we came in at 2 million, right? It's not like it was just, there's this, oh my God, there's no demand for homes. But still, if we keep up with rates as high as we are, who knows how bad it could get. And I think that's kind of the biggest concern around the home building stocks, which is why they're down about 1% right now. Okay, so apparently Halliburton, that company, has been around for 100 years. I definitely did not know. That's how much I know about the oil and energy space. You guys saying Dick Cheney was involved in it? Yeah, I have no idea, dude. This is not a company I looked at. But also Tyrese Halliburton on the Pacers. Some of you guys are getting triggered because he absolutely demolished the Knicks yesterday, unfortunately. So, yeah, I don't know if HAL is the best stock to buy, but I know that Tyrese just destroyed the Knicks last night. It was so bad, bro. It was so bad. I didn't even watch the game, but then I was in a group chat and someone was like, overtime. And I was like, overtime? I was like, we were just up by 15. What do you mean overtime? I saw the score and I was like, okay, I can go to sleep. And then overtime. And so I turned it on and I'm like, there's no way this is happening. There's no way this is happening. And I could hear the cries from New York. Like, I'm in New Jersey and I could hear people crying. I'm happy I was not at Madison Square Garden last night. I could not imagine walking out of that building knowing you were up 15 with 2 minutes left in one of the first Eastern Conference final games in a decade that the Knicks got to, and you let go of that lead and you lose in overtime. I just it was rough last night for Knicks fans. It was rough. But we still have a chance, hopefully. I do think the Pacers are a little bit of a better team. I'm a Knicks fan, but I don't know, dude. The Pacers might be a better team, so we're gonna have to see how it plays out. S&P still green, 0.13%, and then Nvidia 133 currently right now. David B, thank you for the $28 super chat. In the future, I think that the humanoid robot market will be just as big as the internet. In 2030, do you think, excluding China, around 100 million robots will be made? Think Tesla could have 35% market share? I don't think in the next 5 years we're going to have 100 million robots. I think we'll be lucky to have maybe 10 million robots by 2030. Maybe I'm underestimating the scale, but I don't think we get to 100 million that quick. I think more so 2040, you're looking at that multi-100 million, which means there's a lot of growth to have over the next 2 decades, right? But yeah, I think Tesla, I don't know, 35% market share outside of China, but I think that they will be in the top 5. I think there's going to be 5 companies that dominate. So if they all win, they get a 20% market share, assuming that Tesla wins more than some of them. Yeah, 35% is not crazy, or at least 30%. And if the other 5 don't really have the manufacturing capability and the supply chain logistics to deliver the robots, then Tesla, who knows, maybe that's way more than 35% in terms of market share. Which is another reason I think the stock continues to maintain its multiple. Test right here at 338.68 currently right now. APLD getting some love. Applied Digital. This one, again, NVIDIA still owns them. That's up about 5.97%. That one not doing too bad. What about Big Bear AI? That stock up about 1.43. SoundHound. That stock up about 1.8. PayPal 71.57, SoFi is at 13, and then Hoodie right here at 64.59. Apple still not getting any love, correct? DFDV. Okay, so this thing is a decentralized DeFi development company. Essentially, to my understanding, they're working on crypto-oriented decentralized finance products. I don't know exactly what they're doing, but they're developing these different things. That stock's up 32%. So that one, I saw it on Twitter last night. A lot of people were talking about it. Again, chasing these things, it's a little hard to do, but this one is getting a run, and I think it's up like 70% for the week. So a lot of these kind of running on those headlines. Is Enphase still getting hit? The solar stock's still getting hit based on that solar subsidy leaving the tax bill, down 14.9%. It was down 24% in the pre-markets, so it is getting a little bit of recovery. Now down 15%. Right now. What happened to Snowflake? Okay, so Snowflake had a good quarter. Snowflake actually had a really good quarter. That's up 9%. 26% revenue growth. They're profitable. Their percentage of stock-based comp as a percentage of revenue is now going down quarter over quarter, which is really good. They did increase headcount by about, I think, 700 people. So they are hiring more folks, and they guided for 4.3 billion in revenue for 26, which is 25% revenue growth, which they're probably going to beat. Let's say they come in at like 4.45 billion. So it was a good quarter. I mean, I think this thing really needs to get above 200 for buyers to think that, it has a shot of maintaining at these levels, but it probably deserves to be up 9%. It was not a bad quarter for Snowflake. When will Robinhood come to Canada? Well, again, they already bought a crypto company in Canada. The actual brokerage, Vlad said this in some interview a couple months ago, but he was like, the provinces in Canada and the regulations for finance are just like egregious. S&P almost going red right here on the day, basically flat. And so I don't know if they're going to bring the brokerage anytime soon. But if you can buy a tokenized version of Apple on Robinhood's crypto product, even if you're in Canada, maybe that is a way to still trade stocks on Robinhood via crypto. But they are going to Singapore later this year. So that should be fun. Seeing them in Singapore. Yes, we saw the Kraken token news. This is super bullish for the overall industry. Dude, I have a friend who's running a crypto startup. He's trying to do exactly what Robinhood's doing with tokenized assets. Like, this is a big market that a lot of people are going for. A lot of people are trying to do this. Coinbase, ironically, has not put their hat in the ring for this, or at least I haven't heard of that. Coinbase right here up 2.58%. But lots of exchanges want to see if they can tokenize assets across the world. Where's Oracle? Oracle with that Stargate news. That one up a little bit on the day. This was at 130 a month ago. Year to date, still down 4%. It's up 27% for the year. Bottomed at around 125 in April. And now at 150. Okay, what else do we have? Amit, do you think Hood will offer equities and all kind of products in Singapore? Rumors is that it will just be crypto. I don't think they're coming to crypto to Singapore just for crypto. I would be kind of disappointed if it was just for crypto. I think they want, because you can use plenty of products to buy crypto in Singapore, right? So I think they want to build out a whole financial suite of products for Singaporeans. And remember, Singapore is their Asia headquarters, so I think it's not just Singapore, but that's going to be kind of their first focus. So I hope it's not crypto. Amit, did you see the Archer short report? I did not, but is that stock down? Archer is down 3%. Okay, what do the shorts say? What did the shorts say? Culpa Research, we are short Archer and we're extending a $1 million wager to Jimmy Fallon. Wow. Who has earned millions to promote Archer. Holy crap. Jimmy Fallon, they're saying he got paid to promote Archer. Jimmy, if you truly believe in Archer, prove it. Our offer and our full report is now available. Jimmy, we propose you set aside a portion of the money that you made promoting Archer, both on your show and via your appearance at the company's secret NYC event, and match us. $1 million each held in escrow. You, a pilot, and 3 additional passengers complete an FAA-compliant commercial flight, vertical takeoff and landing in Archer Midnight, which is their main eVTOL, flown from Orange County to Santa Monica on or before July 30th, 2028. Holy crap. They are saying for the next 3 years, we don't think that you will be able to actually get in a flight inside of Archer. That is insanity. No flight, and we win $2 million, and we will pledge to donate the money to any LA-based charities. See, the thing about this is, forget the short report. I don't even care about the short report. I care about the fact that they're so confident that they're saying in the next 3 years, Archer's not going to put out a product, and all of this is BS and hype. None of it's real. Now, granted, they could be wrong, but I'm just admiring the confidence of this short. I mean, most of these short forms just put out a tweet and they hope the stock goes down. These guys are putting on a full wager with Jimmy Fallon to try to say that this is not real. Yeah, this is how you do a short report, bro. This is how you do it. You actually like put your money on the line and say that we're willing to take a real bet right here. We believe Archer has systematically lied about Midnight's progress in the last 12 months to conceal underlying aircraft stability issues and its sham transition flight. Archer's claim to near-term commercialization is not only premature, but reckless. Don't just take our words for it. On February 2025, Archer claimed Midnight was fully assembled and finishing up ground tests. Yet Archer emails we obtained via public request reveal that Archer's test flight crew didn't even have Midnight in their hands until March. Tough to do ground tests without an aircraft. Holy crap. I mean, that's definitely something. Emails also reveal that as of April 28th, 2025, Archer's test flights crew hoped high-speed ground tests would begin within the next several weeks. Again, Archer claimed to investors it was finishing up ground testing a full 2 months later. On April 10th, the Salinas Fire Department visited Archer's hangar and posted photos the following day. These photos, however, showed Midnight in a state of disrepair, exposed internals, open panels, and wooden blocks taped to the fuselage. They've since deleted the photos. Dude, these guys are ruthless. These guys are ruthless. Archer only down 3% is a win. I mean, this short report looks pretty ugly. Granted, you know, Archer's going to eventually respond to this, and hopefully they get to say that this is BS, but only 3% is actually not that bad, given Archer was up 30% last week. What do you guys think? You think Archer is a little scammy? Think there's a little bit of fraud here? You think there's a little bit of overhyping? You think they paid Jimmy Fallon to? Do people do that? Do they pay? Can you pay like a late night talk host show to get on the show? Isn't that illegal? Or do they do it underneath like a business transaction that isn't necessarily pay to play? That's like payola, right? That's what the radio, like you can't pay to have your song on the radio through FCC Airways. But, you know, I would imagine radios have taken money before to play a song. That's interesting, dude. That is interesting. Archer down 3%. I guess we'll keep updated with that story over the long term. they paid Fallon for NFTs. Holy crap, dude. I'm just surprised by the level of confidence this short report has. Like, usually short reports are like, just like, you know, it's whatever. But this one is actually saying, no, we are willing to legit bet. We are willing to legit bet and say this isn't real. Lilium. Lilium was the company that Palantir invested in. Lilium went bankrupt. So Palantir invested in a SPAC called Lilium in Germany that tried to do eVTOLs. It didn't work. And now, granted, I think Archer has made a lot more progress than Lilium ever did, but still, it's a hard space, you know, and investors are definitely betting on the potential for them to succeed. It's kind of 50-50 in the chat. Some of you guys are saying scammy. Some of you guys are saying not scammy. Wait, did I say hangar instead of hanger? Did I say that? You guys are saying in the chat. Did I really say hangar? I think I did. Hold on. Where's the word? Oh, yeah, you're right. Why did I say hangar when I was supposed to say hanger? How did I mess up that word? How did I say hanger on the airplane or the eVTOL as hangar? That is, well, hey, hold on. They spelled it Hangar. That's why I said it like that. You're telling me you wouldn't say hangar if you saw, hold on. You're telling me you would not say hangar if you saw that? Like, can we like actually be honest here? You're telling me you would not say hangar if you saw this? Hangar definition, a large building with an extensive floor area, typically for housing aircraft.
Hangar.
See, this is why I hate Google. I actually...
Hangar.
I really don't like foreign propaganda. Google's bought and paid for by China, dude. Like, we all know this. We all know this. There's no way an American company would have these types of definitions. Dude, it's spelled Hangar. In what world does someone look at that and be like, hangar? Hangar needs an E and the R at the end for the sound. Like, you know, I don't know if I have to go back to elementary phonics or something here, but it's hangar with an E and R, not hanger for an AR. Doesn't make any sense, bro. Doesn't make any damn sense. It's not Rutgers' fault, bro. Don't blame Rutgers. Rutgers was a great school. Even if I didn't go to class for 4 years, Rutgers was a great school. But like, you know, Rutgers actually does have the best philosophy department in the country. They have one of the best sociology departments in the country. Their computer science program, I think, is top 40. Their business school is actually really, I think they have a top 100 business school. It's not as good as like Michigan or some of these other states, but you know, their business program isn't bad. Rutgers is a great, you know, Rutgers actually was supposed to be an Ivy League back in the 1800s, but they rejected it because they wanted everyone to have access to they didn't want to be part of like the elite club, because then, you know, kids inside of the state would not have access to it. But they were part of the Harvards, the Yales, the Columbias. Like there was a group of those Ivy Leagues. Rutgers was supposed to be part of it, and they said no. So I technically went to an Ivy League, if we really like reverse engineer history. Dude was chilling at the fat trucks. Dude, the fat sandwiches at Rutgers were incredible. They were incredible. You know, do you guys know I got waitlisted from Harvard? I didn't get into Harvard, but I got waitlisted. So waitlisted is when they're like, they send you an email and they're like, hey, you're not rejected, but we're going to take another couple months to think about it. And then a couple months later, they're like, yeah, you're not getting in. But still, they gave me a couple of months of hope. I remember telling my mom, I was like, Mom, I got waitlisted. She thought I got into Harvard. She's like, oh my God, you're getting into Harvard. And then 2 months later, I was like, so I'm going to live close to home. I'm going to be 40 minutes away at Rutgers. And that's how, you know, that's how college played out. Jamie Dimon just said, from his meeting with China to continue cultivating Chinese capital market, better serve business operations of multinational companies in China and oversee development of Chinese companies. Okay. So Jamie Dimon basically saying, hey, we're going to keep investing in China. And that's kind of what he has to say, because the Chinese market is important. But we got that update from Dimon just now. Where's Netflix? Is Netflix at 1200 still? Netflix 1193, basically at 1200. IONQ, dude, more of the quantum names getting some love. IONQ, wow, 17%. And then D-Wave up 17%. Shopify right here up about 1.2%. The quantum names getting some love, and NVIDIA at 133.44 right now. It's called a delayed rejection. Dude, that basically is, that's what it's called. A delayed rejection. Could you imagine what my life would have been like if I went to Harvard? I feel like my life would be definitively worse than what it is right now if I went to Harvard, bro. And I have almost 99.999% certainty that my life would be definitively worse if I went to Harvard. I just feel like I wouldn't have taken enough risks with my life. I would have been too coddled by the idea of my Harvard degree. I would have got some fancy consultant job. I would have been making, $150,000, $200,000 a year at like Deloitte or KPMG or whatever. And all my potential would have been stuck in PowerPoint presentations at some corporate board that I'm consulting with. I feel like that's what would have happened. I really do. Rutgers, it roughened me up. 40,000 kids, you're not sheltered. No one really cares about you. You got to figure out your own style, your own way. And I feel like it would have, I feel like it did force me to just like figure shit out. Yeah, you never would have been in the stock market. That's facts, dude. I probably would have been reading Marx and complaining about capitalism. I'm not saying every Harvard kid hates capitalism. I'm just saying, the education, there's a little bit more around how to critique systems of power and institutions. Who knows? Maybe I would have fell into that trap. I mean, I was a communist back in high school. I was a card-carrying communist. But then I took Macro 101 and I was like, this doesn't make sense. And then I had to pay taxes. And I was like, you know what? I don't like the government anymore. I really am not a fan of this. OpenAI's first device may be a screenless, neck-worn AI gadget, a minimalist iPod shuffle with cameras and mics. Is the information reporting that? Is the information usually has good sources on this? Dude, that would be interesting if OpenAI puts out a necklace with no screen and you just kind of talk to it. Now, granted, I don't know if that's going to be the best form factor, but still, I think that would be kind of exciting if that's the way they play it out. Where is this other piece? Hold on. I'm trying to see if the information actually put out this article. If it's from the information, that could be legit. If it's from the they usually get the scoop on this stuff. I'll see if I can find it, but if it's from them, that might actually be. Oh, it's from Ming. Oh, Ming is one of the best Apple analysts. Okay, so that means there's actually some potential there. That means that there's actually some truth to this. If it's from Ming, has been analyzing Apple for a long time. Where's Apple stock right now? Apple, yeah, almost below 200. There you go. All right, let's get some updates from some of the money managers and see kind of how they're thinking of the market, how they're thinking of bond yields, and also where they think that tariffs might be going.
Out a month, feeding off of that bond market sell-off. Joining us here at Post 9 this morning, Sebastian Page, T. Rowe Price, head of global multi-asset and chief investment officer, also a former PIMCO executive vice president and author of the book, The Psychology of Leadership. Sebastian, welcome back. It's good to see you.
Thank you, Carl.
Bespoke points out yesterday, the third worst stock reaction to a bond auction in history. Was it a quirk about the 20-year, or is something larger really going on?
And it was small, too, just 16 billion. So, look, there's something going on. Rising rates are worrisome. They reflect worries about the budget, the bill that just passed, and it's basic financial math. Yields up, valuations down. Now, to put that in context, though, I'm not too worried about it. We are short treasuries in our portfolios. But I'm not too worried about it because, look, the long-term 30-year rate is actually not that far from where it is now.
Right. More about the delta coming off of the April levels. Is that what it is?
It's the delta. It's the acceleration. It's what's been going on in markets for the last few weeks, which is just a lot of extreme tail events. Big jumps on the downside, big jumps on the upside. Now it's coming to bonds, too.
Right. You do think on equities, valuations are kind of expensive once again, right?
Yeah, it's, blink and you will miss it. The market was almost flat in August, but you had 2 days where markets sold off by 10.5%. We've had 3 drops of that magnitude since World War II. And then one day popped by 9.5%. 2 such events since World War II. But April was roughly flat. We're back into fairly expensive valuation territory, especially given that growth is slowing.
So you're short bonds, but you're not worried about the move. Why? I mean, isn't it a signal that the fiscal concerns are back to the fore and the growth of the deficit is going to be a problem?
It's absolutely a signal. And by the way, like 7% deficits, That is recession level deficits. We've just gotten used to this post-COVID. So these are real worries. I just don't see this as a cataclysmic regime changing event where, you know, everything's going to fall apart because bonds in the 30-year are in the 5% range.
But they could go higher, I guess.
They could continue to go higher. We're positioned for that. Look, ultimately, we are close to neutral between stocks and bonds. We're positioned for three things. We're positioned for the market to broaden. So I think we're close to peak market concentration. Like 99% of history, the market has been less concentrated than it is now. We're positioned for tail events on both sides, big swings. So we like to be close to neutral. And we're positioned for inflation risk and some of these rising yields. So those are our three big themes in our portfolios right now.
Again, because they're short treasuries, they think yields will rise. So you do have people that say that believe, hey, it's not going to crack the stock market if we get higher yields, but they are expecting some level of higher inflation expectations, which means either rates that will stay high, potentially higher rates, and just the idea that yields aren't getting ready to come down anytime soon. Meaning there's not a bidder that is excited to bet on inflation coming down yet. We need a really good CPI and PPI in June, and we got a good one in May, but this was like kind of 1 month after tariffs, 2 months after tariffs. You'll have a lot more data on how the tariffs actually infected the consumer. And so the May CPI that we get in June, that one is also going to be incredibly important. Is Grab going for $5? Where is Grab? Grab right here. Yeah, at 498. There you go. That one's up a little bit today. Remember, Howard Marks bought 10 million shares. Ray Dalio bought another 4 million shares. Like we saw the toots, it's at 83% institutional exposure. They've loaded up. I think the main catalyst is the acquisition. It's something you're going to have to be very patient for over the next 4 or 5 months. But I do think, based on everything I'm reading, that acquisition is inevitable. And once it does happen, you know, forget what happens to the stock. What's really going to happen is the growth rates are going to go from 20% to like 40% on EPS. And that's when I think the market's going to be like, holy crap, this is going to get really juicy, especially in a region that's growing 5% on GDP. We got OpenAI CFO. She's on CNBC. Let's see what she has to say about this new Stargate UAE partnership, and then we'll go from there.
So going global here, expanding in the UAE, what does this tell us and what does this say about OpenAI's global ambitions?
Sure. So Stargate UAE is just an extension of something we announced last week, OpenAI for countries. Mm-hmm. So think of it in 3 parts. Number one, how do we deploy AI with our allies and with our partners around the globe? We recognize that whether it's breakthroughs in healthcare, personalized learning, areas like energy, innovation, they're not all going to happen in one place. So we want to make sure our technology is around the world to benefit people everywhere. Second, it is, of course, an infrastructure build. Mm-hmm. We will be putting a data center into the UAE, into Abu Dhabi. It's going to start with something around 200 megawatts and build up to about 1 gigawatt on their campus. That's a full 5 gig. And we're doing it with our partners, as you said, to make sure it's safe and secure. And then finally, it's the investment piece that I'm sure we're going to talk about.
What is it costing you? What do you have to spend on that?
So to build that data center in UAE, the kingdom itself is going to build that. So UAE plus G42, they will put that data center in place. Why would they do that? Well, I think countries and states are all recognizing that, first of all, those builds bring economic wealth to a region. They bring skills. There's going to be a skill gap if we don't get ahead of it on AI. And frankly, they set them up to be able to drive this technology into the arms of their populace. So remember, this region in about 2,000 miles, which is about the distance where latency still works well for our products, you reach about half the world's population.
Interesting.
Isn't that crazy?
Where are you in terms of ChatGPT numbers? What percentage right now of the world's population do you have using your
Let's
device?
see. Let's see if she gives us a number. Let's see.
Or not devices yet, but your software at this point.
So the last numbers we gave were over 500 million were weekly active users. You can imagine our monthlies are even bigger. So we're starting to see a pretty staggering percentage of the world's population is using the technology. And that's all organic. Remember, we've done very little marketing to date. So this is people just finding the technology, recognizing that it can really change their life in small ways, like what am I going to make for dinner tonight, to really big ways. I mean, I use deep research every single day of my life to do things that a CFO needs to do.
You mentioned some of the...
Okay, she didn't give us a new number, but I think that 500 million weekly is not 500 million anymore, dude. I think it's a lot more than 500 million, but they probably don't want to disclose that yet. But I would imagine it's closer to 700 million people using it a week, or at least 700 million people using it a month.
partners on this. Oracle is a big one, also SoftBank. We don't really see Microsoft. Maybe they're more behind the scenes, but Oracle has been a big anchor of Stargate. Are they comfortable? Is Microsoft comfortable with you guys having closer partnerships with other cloud providers, given how much they've spent and invested in OpenAI?
I mean, yes, because they're an investor in OpenAI. I think recognizing just the scale that we're getting to, last year we really pushed on how do we build a much more diversified approach to our infrastructure build. It begins with Microsoft, a really core partner, but now we're working with folks like Oracle, CoreWeave, as you mentioned, and now shifting into a more global footprint. But Stargate will remain really the way we talk about our infrastructure. As you know, we were at the White House in January, I think, with President Trump. At that stage with Larry Ellison from Oracle, with Masa-san from SoftBank, and Sam, of course, talking about this first big push on $500 billion into Stargate here in the United States.
And maybe we're reading too much into Satya not being there and Larry Ellison being there.
No, I think on that, I think you're overreading. Remember, G42 itself, Microsoft is an investor in G42. And we continue, I mean, we will always be close partners with Microsoft, given the investment, the infrastructure they build for us, and of course the IP. When you buy the Azure OpenAI API, you are buying our technology.
We've got to talk about Johnny Ive. So, I mean, so much news from OpenAI this week, but $6.5 billion to buy I.O., which, of course, Johnny Ive, the designer of the iPhone, this iconic name in Silicon Valley. How did you come up with the number, though? This company doesn't even have a product. Tell us about how you came up with that math.
So for a start, when you're thinking about what's the opportunity, we're in a brand new era of computing. And if you think about every era previously, like the PC for the internet age, the phone for the mobile age, Johnny was really at the nexus of a lot of these, right? What the graphical user interface would look like on the PC. And the phone, when we got to touch, it was kind of incredible. And so we believe that as you birth this new era of AI, there's going to be new platforms and new substrates, the way people experience it. I think it's personally going to be a lot more multimodal. So we think of tech today a little bit more around touch, but we as humans, we see things, we hear things, we talk. And so our models are great at that. And so we were excited to work with the best in the business on that. How do you value that? I don't know. It's very hard to value something in that early phase. You're really betting on great people. And beyond Johnny, we were just talking about it before we started, there is an incredible team, because it's not just about imagining what a new platform could look like, but then you've got to be able to craft it, you've got to be able to build it, you've got to be able to understand supply chains. And I just love his team. Tang Tan deserves a total shout out as someone who helped build the iPhone, build AirPods, build the watch. We've got a lot of great talent.
It's a great point that it's not just Johnny, it's a lot of the top executives, former executives from Apple. What's the commercial opportunity? When you think about return on that investment, regardless of how much you spend up front, what's the eventual opportunity in hardware?
Yeah, the opportunity, I think, is first of all, how do we get people more and more excited to use AI? So how do we get that platform out into the world? And I think when you start thinking about it beyond just a phone, I think it starts to grab the imagination. So if we can get people around the world excited to use AI, we have many ways to begin to think of a business model around that. So it could be an ongoing bigger subscription for ChatGPT. It's getting attach rates. Remember, today, across our user base, the vast majority actually use our product for free. And that's on purpose, because we want to make sure AI gets into the hands of everyone. But getting you to that point where you see the value to upgrade, that's with new products. So most recently, ImageGen, when it went viral at the end of March, that was a moment where we saw people fall in love again with what AI could do, but also start to subscribe more, because they would hit, effectively our paywall would have to come up because it starts to get expensive. And I think hardware is just a part of that next value add we put into the product.
You have partnered with Apple, though, before. Why not just team up with them on devices?
I mean, I think it goes back to what we were talking about with infrastructure, that we want to work with many partners. Like when we single thread ourselves, we don't think that drives max innovation. So we continue to work closely with Apple on their device, and we'd love to see more and more being done with AI so that you can really work with that device in a multimodal way. But we also want to kind of keep sparking innovation broadly in the ecosystem.
And you've described it before in OpenAI before as sort of a hyperscaler. You are also becoming sort of this vertically integrated, almost big tech company. You're doing infrastructure, you're doing devices. Does that make you worried about how you would be regulated potentially? As you do more deals, you're more acquisitive. Do you worry about being regulated like a major tech company?
I think as we work with governments around the world, the message we're really trying to carry is AI is really going to change the world. And I think governments, the OpenAI for countries, so part of going back to Stargate UAE, I think what governments are recognizing is, first of all, there's a huge tug from their populace to understand what this is and help me, my government, help me understand what to do with it. So they're actually deploying ChatGPT wall to wall, we call it internally. So the government of Estonia just put ChatGPT into the hands of every secondary school child, or I don't know, young adult, in their country. I mean, here in the United States, I haven't seen a United States wall to wall, but in the state of California, which is almost like a small country, we saw Cal State universities just take down 500,000 seats of ChatGPT.
Wow.
So that's kind of at a country level. And then you start pushing it down into areas like the healthcare systems, the education systems, as I talked about, and then into private sector. And in doing that, I think governments are trying to find this balance of how do we not regulate the initial spark? Like if we do that and we tax that original, we effectively don't allow the innovation to blossom.
Yeah.
How do we do it at the when the flame is fully ignited? But also make sure it's safe and secure for our populace. And we spend a lot of time on this internally as well.
Safety and regulation is probably
So, I mean, bullish, bro. Like it is becoming obvious to me that they know, they being OpenAI, how big they are becoming. They didn't give us new user numbers because they probably don't want to disclose that yet and make a headline, but we know it's way more than 500 million. And we also know that they don't need more data centers or more compute or more chips unless they had more users that are using their products. So taking over the Middle East seems to be Sam Altman's next goal. Remember, 2 years ago, Sam Altman was, and this is not me misspeaking, he was legitimately trying to raise $7 trillion. And he was at this conference, I think it was in Saudi Arabia, and they asked him, like, it was like a joke. There's like, hey, so you looking for 7 trillion? And he was on the Zoom and he started laughing because, like, legit, he realizes we need a lot of money to be able to take over the world and bring AI to everybody, especially if we want to bring AI to them for free, because most people are not going to pay for this. So how do we bring it to everyone? First, the technology has to be available, and then we have to have the distribution to get out into the world. If you don't own OpenAI like me, I don't own OpenAI. I think one of the best ways to get access to it is NVIDIA. NVIDIA is correlated with OpenAI's growth simply because they will have always first priority to next-gen GPUs, and then also OpenAI's growth will correlate to more demand for NVIDIA's chips. So, I mean, even if you don't own OpenAI, I think NVIDIA seems to be the best proxy. Obviously, NVIDIA has more risks than just investing in OpenAI in and of itself because it's a separate company, but it feels like it's really bullish and a tailwind for it. And then maybe CoreWeave is a way to get at. I mean, look, all the semis in some way are related to OpenAI, but CoreWeave right here up 7% on the day. Again, your boy sold at 105. It could be up another $20 today. But this thing, she mentioned CoreWeave as well. There's a lot of demand for GPUs, and not all of it can come from NVIDIA. So you have to go through the GPU resellers and renters like a CoreWeave. And as a result, I think that's why we're seeing this momentum. Let me pull up this clip by the CoreWeave CSO, who was on Bloomberg yesterday. And I think it'll hopefully explain a little bit more about why their platform is scaling as aggressively as it's scaling right now.
And CoreWeave. I think about CoreWeave as a builder of data center or AI infrastructure, but Dell is a builder of servers. How do you work together?
So it's a deep technical partnership, first and foremost. And I'm going to be asked later today why that partnership started and how we choose partners.
Right.
It's really rooted in trust, right? Is I have to know that when we have a problem and when you're building supercomputers at the scale that we do, there are problems. That when that happens, I can call somebody and they help me solve it very quickly, right? So Dell has been amazing from a trust perspective, from an engineering performance and expertise perspective.
They move quickly.
They've moved very quickly, which has been great for us. It's really important to be first to market for CoreWeave,
right?
Because our customers and the biggest AI labs in the world really trust us to help them be first to market with their products. So Dell has been instrumental for us in the GB200 rollout. They've been a tremendous partner, and we're excited to grow.
Let me just jump in there because this is at the core of what we're talking about. You both rely on NVIDIA's core technology, the GPU or AI accelerator. NVIDIA historically does not have its own direct sales channel. They would go to a Dell or somebody else would go to a Dell and be like, I want some NVIDIA gear. Where do you fit in? Is Dell the sales channel for CoreWeave or CoreWeave's the sales channel for Dell?
It's a little bit of both.
Right.
Right. And the lines have been blurred there for sure. We're working with customers before we purchase infrastructure. We call it success-based financing at CoreWeave. We're only investing the capital when we have a contract in place. So we'll do a deal with the customer. We'll go through Dell. We'll work with Dell and NVIDIA to get our allocations to actually build the servers and deploy them in CoreWeave's data centers.
I'm going to ask you a question that I asked your CEO literally 7 days ago, and I'm hoping that we can make progress on an answer. CoreWeave has a lot of workloads up and running. What is the proportion of training workloads versus inference workloads?
So we have visibility into some of our customers' workloads and what they're doing just from our engineering partnerships. There's some customers that we don't necessarily know what they're serving on our infrastructure. The vast majority of workloads that we're serving today, I believe, are inference-based, right? We still have big training workloads, but as the training of these models has increased in an order of magnitude via the scaling laws over the past couple of years, I think the inference workloads are about a generation behind, right? So as training went from 1 to 10, and then 10 to 100, inference went from 1 to 10, 10 to 100, just one step after that. And we're seeing that step change in demand now for inference, and it's definitely overwhelming the supply chain and what the clouds can actually deliver.
And I mean, that's the reason why CoreWeave is trading at their multiple, dude. That's the reason. With inference demand actually ramping up the way he's talking about, CoreWeave right here, 113. They did that interview. The stock was 88, and now we're at 113. I mean, it's a totally different playing field, to the point where they could dilute shareholders yesterday, and still the market did not care. And it was smart for them to raise that $2 billion, but the market is really seeing the growth potential on a name like CoreWeave right here. You guys mentioned Microsoft. Yeah, that's another way to get access to OpenAI. I mean, Microsoft does own 50% of them. I've always still been confused of exactly what do they own. They own the nonprofit. They own the actual stock. The partnership has never really been discussed. I mean, even, when she asked about, hey, why is Microsoft not involved on this list? I don't know. The CFO had a non-answer. They're just like, oh, well, it's not that big of a deal. It's like, I don't know. The market never really appreciated this partnership as much. They definitely didn't increase Microsoft's multiple because they own OpenAI. Like, there's never been this added level of hey, Microsoft gets another couple points on their PE because of OpenAI. But then again, if OpenAI goes to $1 trillion, Microsoft owns half of it. So I'm assuming if the valuation is $300 billion, Microsoft owns $150 billion. I think that's how that works. Then if they go to $1 trillion, Microsoft should own an extra $350 billion of share appreciation. And that technically, just like Google, right? They reported that $8 billion gain on SpaceX. What if one day in 5 years, Microsoft can show a multi-billion-dollar gain just from their OpenAI equity? So that also could be another way to get exposure to it. Where's HIMS? Did we chill out for the day? Is HIMS still down? Yeah, it was down 11%. Now it's down 6%. So not as bad as it was during the day. ANF, Abercrombie and Fitch, is that up? Huh. They didn't have earnings today, right? Did they have earnings? Abercrombie, that one doesn't move without a reason. Abercrombie and Fitch. No, they didn't have earnings. BJ's had earnings, though. That stock, Wholesale Club BJ's. Is BJ's international, or is it only the United States? Do you guys have BJ's in Europe? EPS 114 versus 91 cents, beat by 20. Wow, 25% beat. That's really good, dude. That's better than Costco numbers. And then 5.1 on the revenue versus 5.19. EPS is up 34% year over year, even though revenue is up 5%. I don't think these guys are international. These guys are Costco's international. I don't think BJ's is international. That one's down 2.5%. And then Analog Devices also had earnings this morning. ADI, that stock's down 3.2. They beat by 9% on EPS, 185 versus 173. EPS is up 32% year over year, and then 5% on revenue, 2.6 versus 2.1. Revenue is up 22% year over year. I'm not even going to see these. I'm not even going to say these comments that you guys, you can't say BJ without someone saying it. You just can't. There's no way. You can't say anything. But it is a wholesale. It's basically a carbon copy. Exactly. It's a carbon copy of Costco. Exactly. It just doesn't have the same type of brand that Costco has. But it's basically a Costco's. Urban Outfitters also had a decent earnings yesterday. Are they up? They were up 5% yesterday. They are up. Wow, 20%, dude. Holy crap. I mean, it was a good earnings yesterday. I don't know if it was a 20% earnings. Well, technically I'm wrong because they beat EPS by 38%. So, I mean, this is probably warranted to have good reaction. After hours is up like 5%. This makes sense though. That's like a 40% beat on EPS. EPS is up 70% year over year. Yeah, you do that, markets are going to be happy. Now, why did they beat EPS by this much? I don't know. This is a clothing company. I don't know if they fired a bunch of people and they got their costs down. I don't know if they incorporated AI to enhance their deliveries or product selection, but whatever they did, it got the market excited. So there you go. That's what we got on Urban Outfitters. Military Bros, thank you for the $10 super chat. Is $1,000 worth allocating on CoreWeave at this current level? So, I mean, I wouldn't chase CoreWeave in any serious way at this level at all. That's why I only bought one share yesterday. Could it go higher? Sure. But this thing is up 200% of the past month. Like, I would just not chase that. Could it go up another 30%? Maybe. Long-term over 5 years, is CoreWeave bigger than it is today? I think the answer is, obviously yes, if AI and data center demand continues to grow. But that doesn't mean it's not going to take a round trip back to 85 or 70 before it gets there. Granted, momentum's good. Momentum's good right now. So if you do chase it, you got to be ready to ride with the momentum or die with the momentum on the stock. But yeah, I think if you didn't get in even at 100, you kind of missed the boat here, and now you're really asking it to go even higher when it doesn't need to. The stock doesn't deserve to go even higher. It could. And after earnings, I thought it deserved to get some love. It was down 5%, and now, I mean, it was at 65 on IPO, or sorry, on before earnings. It was at 40 at IPO. It's at 113. So expecting this to go to like 150 now, I just think is asking for a lot from the stock. Meta right here, 638. Meta's been flat for the past couple of weeks as well. That's just been chilling in the 600s. Palantir 124.40, up 3%. Remember, we had the SAP partnership. We had the Warp Speed partnership this week. And then yesterday, we got the $800 million extension on Project Maven. So Palantir, great week for this stock, even if it is below that 130 level. And then Tesla at 340. We got another, not an upgrade on Tesla, but a reaffirmation of a $400 price target on Tessie. And that came from, I think it came from Oppenheimer. I'll try to find it right here. But basically they said, hey, we think Tesla's going to be okay. Here's Dan Ives yesterday on Tesla. But you are starting to see some of the Wall Street firms basically acknowledge that 400 feels inevitable for this stock now.
Elon Musk said yesterday as to how he would turn around the company. And he said, oh, it's already turned around, that you would agree with that.
I would. Look, we've talked about on the show, it was a dark period when he was at Doge. We went through that. He ultimately was a fork in the road, clock struck midnight, he picked Tesla. And now I believe that path to 2 trillion market cap is on the table because of autonomous and robotics. And I just believe now you'll still have some chop in terms of demand in near term. But I think overall, this is going to be a golden era for Tesla.
Dan, there'd also been this bull case after the Trump election, why you saw Tesla surge so much. And that bull case went something along the lines of easier regulation for Tesla, that he had the ear of President Trump. If we are seeing Elon Musk starting to pull back, not spending as much in DC, not as present with Doge, does some of that need to be priced out as well then?
Yeah, it's a good question. Obviously, Doge took on a life of its own. I think Musk recognized that in terms of some of the brand damages, which is ultimately why he had to leave Trump White House. But in terms, I do believe you are going to have less regulation. I think the pathway to autonomous is going to be there on level 4, not just for Tesla, but for Waymo and others.
And that's basically what Piper Sandler said today. So this was the analyst that reiterated their overweight with a $400 price target. They said, all eyes are on Austin. It's no secret that Tesla's delivery outlook has deteriorated. The company has not disclosed the pricing specifications or launch timing of new products. And as a result, we think most analysts struggle to defend their 2026 outlooks. In other words, essentially all of Tesla's recent 44% rally can be explained by multiple expansion, with the stock now trading at 165 times earnings based on consensus estimates. The optimism is almost certainly due to next month's robotaxi launch in Austin. It's hard to know what to expect, and downside surprises seem possible, but regardless, we think Tesla's a once-in-a-generation disruptor, and we remain firmly overweight. So the analyst community is saying, yeah, we get it. The earnings suck. They're probably not going to get that much better. Tesla's not really giving us a ton of details on their next-gen vehicles, all that stuff. But even with understanding all of that, it's AI. And it's the best version of AI. And it's an AI that we can't deny with FSD. Tesla right here, 341 going green on the day. And yeah, market's not fading it. At least not fading it based on those earnings. What's also really interesting right here about the stock is, again, Elon talked about a variety of things this week. Remember, he said we're not buying Uber. He said we're buying 1 million GPUs. We are going to have FSD in Austin. But the one thing that he said that was also really interesting is that there's only going to be 10 to 12 in the first couple weeks on the roads in Texas. So it's not like there's going to be a lot of them. But he thinks by the end of 2018, there could be or 2026, there could be 1 million. And if it does get to the point where it ramps up to 1 million, slow at first and then all at once, I just think that's when the street's going to be realizing the idea of unsupervised autonomy is not a joke. And then if they can get that cost per mile down, the street's really going to get more excited. NVIDIA right here, 133.26. Here's a fun question. Let's ask this. Let's ask this question right here. By the way, 53% of you said yes on do you trust the green? 53% of you. All right. So 1 year from now, which does better from this price? Tesla or NVIDIA? So Tesla from 350, NVIDIA from 135. A year from now, which one's higher? I feel like you guys are going to say NVIDIA. I feel like everyone's going to say, okay, 57.43 already on NVIDIA. Who knows, bro? If Elon figures out a way to get Optimus into the world and FSD really scales, maybe it's Tessie. It sounds crazy to say that because we know the earnings are not going to be that good, but maybe somehow it ends up being Tessie. I kind of think NVIDIA is going to do better just because I see their growth story more easily. But then again, the growth story for Tesla is unknown, but that's why the stock is volatile. That's why you deserve it if it goes up like crazy, because you're kind of betting on something more unknown and hoping that it ends up playing out in the right direction. By the way, here's another chart right here that I wanted to show this morning. This is 2007's 30-year yield in blue, and the yellow is 2025's 30-year yield. It's looking awfully similar. At one point in 2007, we peaked to 11.2% on the 30-year. We're right now at 5.1% on the 2025 30-year. I hope this chart does not look like it looked in 2007, because if that's the case, I don't know. In 2007, we had a mortgage crisis. We didn't have AI. There's a lot of different variables, but if it does look the same, one could argue that there is something that could be unraveled in the credit markets. Now, if that doesn't happen, and this is just a little bit of a pit stop, and this chart isn't identical, then I think obviously the stock market will be able to overlook it. That's what JP Morgan said today as well. They said, hey, just ignore the bond yields. I'll put up that report in a second, but they said it's not that big of a deal as what people think. It's obviously an issue, but the government's going to keep spending and stocks are still the best choice. So kind of ignore it. But it does look like what we saw back in 2007. 61% of you said NVIDIA. 61% of you said NVIDIA. So JP Morgan, their headline was, the downgrade by Moody's of the U.S. sovereign rating from AAA has raised questions about its impact on markets. We believe the downgrade, which follows similar downgrades in 2011 and 2023, will likely have limited impacts. Essentially making the argument that you can't just get out of the best companies in the world based on a downgrade. And I think that's logical, right? Like 10 years from now, are you going to be happy you sold Meta because of a downgrade on the credit rating of the United States? You would have to bet that the United States collapses. And even with the downgrade, even with the deficit spending, I think most people would think that that's not how it plays out. What about Palantir and NVIDIA 10 years from now? That's a good question. Okay, let's do that. So 62% of you say NVIDIA versus Tesla a year from now will be better. What about NVIDIA and Palantir? NVIDIA or Palantir? 1 year from now, which one does better? I think I asked this a couple of days ago too. 1 year from now, which one does better? Which one does better? I think it's probably NVIDIA too, dude, just because Palantir has already outperformed so much and NVIDIA is still trading at not dirt cheap multiples, but way cheaper than where they were compared to Walmart or a Netflix even, or a Costco. Unless Palantir puts up an NVIDIA type of quarter, then all things are off the table. But if Palantir can even hold this range for the next year, to me, that would be very happy. We are doing a good job of normalizing. I said we got to normalize triple digits. It's been about a month. In the next couple months, if we're holding triple digits, I mean, I think we can effectively say, at least for the short term, the market has been okay with buying Palantir in the triple digits, which is, a good thing for all of us that own Palantir. Let's check on the option volumes today in the stock market. Here are the top 20 stocks that have been traded the most in the first 2 hours of the market open. NVIDIA, Tesla, Google, Ibit, Apple, Palantir, she's up there, MicroStrategy, Marathon, Amazon, UNH, CoreWeave, back again, Magna International, MGA, I don't know what that is. Magna International. This is a $10 billion company. They are automotive supplies. That's what they do. That's in the top 10. Snowflake's up there. D-Wave again. GameStop. I said GameStop was not moving, and there she goes. GameStop up 6%. HIMS back there. Meta and Rigetti. So you got Rigetti and D-Wave, quantum names. You got Snowflake that just had earnings. You had HIMS that had a bad headline yesterday. You had Marathon, MicroStrategy, Bitcoin plays. You have Palantir. And then Google is in the top 3 with NVIDIA and Tesla. Lots of these tech names getting into those top 20 traded option contracts. And we're only 2 hours into the day. You guys know MGA? Magna International? I've never heard of this company. Magna Automotive. Do you do car parts? They're a manufacturer of different automotive parts. Yeah, I've never heard of them. Also, isn't AutoZone up today? AutoZone? No, AutoZone's down. Or no, it's Advanced Auto Parts. Okay, why is Advanced Auto Parts up 47%? Why is Advanced Auto... Is that why MGA is moving? Because that's also an automotive parts company. Why is Advanced Auto Parts? They didn't have earnings today. Advanced Auto Parts. And how are they not in the top 20, but MGA is? I feel like it's kind of a little bit of a proxy trade. Oh, no, they did have earnings. Holy crap. This was a good earnings, dude. My goodness. They reaffirmed 2025 guidance. Their EPS was, it looks like 20% more than what the market expected. And CEO says, the recently implemented tariffs have created a highly dynamic economic environment. Despite this, the team is staying focused on the turnaround in our path. So basically, they're not blaming tariffs. Their profits were way better than expected. And more importantly, their guidance for fiscal year 2025 in terms of EPS in particular is unchanged. Dude, 47% though. This is not a stock that moves up 47. This is supposed to be a boring stock. Advanced Auto Parts. Now year to date, this stock is only up 4%. They're still negative year to date after this. Holy crap. They're still down 34% over the past year. Dude, this market, interesting market, 47%. There's that much interest. Do you kind of think the market's just like, hey, we don't know where else to put our money? And so we're going to bet on a automotive company that is saying they're going to keep their profits stable for 2025 in the midst of tariffs? That is very, very, I did not expect to see that up almost 50% today. U.S. Senate votes to block California's landmark plan to end sale of gasoline-only vehicles by 2035. Okay, there you go. Senate is voting on it. I guess we'll see if they end up getting the votes for blocking gas vehicles. That vote's happening today. Yeah. They're going to need 60 votes. They're going to need 60. Oh, wait, no. Did the vote already happen? No, I don't think the vote happened. I think no, it did happen. Hold on. So what was the vote? What was the vote? Yeah, solar stocks are still down, obviously because of that tax bill loophole for them. But also, I think the vote happened. I'm trying to get the exact number on this vote. I think it passed. Senate vote for cars. Okay, I'm not getting an exact news source on saying that it passed, but it looks like the solar stocks are going down potentially because it did get passed again. If not, we'll know soon. I kind of agree with it, dude. I don't know. I don't know if you should force people to not have to buy a gas car. That just feels a little weird. Now, granted, if you are strictly caring about the climate, that's a whole different question. But there's also a lot of jobs, I would imagine, that get affected if people can't buy gas vehicles, right? So I feel like that has some implication there as well. Palantir 125. All right. Palantir getting a little bit of love, but back above 125. Rocket Lab back above 20. Or Palantir back above 125. Rocket Lab back above 25. Tesla right here at 340. Nvidia 132. Robinhood still at 64.96. And then HIMS. Are we recovering? HIMS kind of recovering. 4.4. It was down 11. Now it's only down 4. The S&P, though, is flat on the day. The S&P is flat on the day. Yeah, I think Congress is still voting, guys. I don't have an exact source that they've done the vote yet. So I will get you guys the update as soon as that vote comes in. But they are... So one of the senators tweeted they started voting 11 minutes ago. So I think we should get an update like really soon on if it gets passed. And then we'll see. Serve Robotics also is moving today. I don't know why Serve is moving. That one, 18%. A lot of these names just getting a bunch of headlines from a lot of other places. Oh, Magna issued 600. Okay, so if they issued 575 million euros of senior notes today, that could be a reason why it's in the top 20 options traded. People are reacting to that news as well. And that's probably causing it. Enphase is the worst stock performer during this entire bull run. Yeah, solar has just been horrible, dude. It's just not been what the market wanted over the past couple of years. It's just not been what the market thought would play out. By the way, I don't see any Serve Robotics headlines. I feel like this is more technical, maybe a little short squeeze, but there's no headlines to be causing this. Mick, can you buy more hood to push? I bought more hood yesterday. Dude. Actually, no, I bought another 100 shares last night at 63.80. So I bought the 20-year bond auction dip. I am the definition of that retail investor that sees down 0.3%. I'm like, oh, buy. Except on HIMS. HIMS could go down 50%. I'm like, well, that's the one I just don't. Oh my gosh, dude. But yeah, I bought more hood yesterday. Okay, if I'll say this, if HIMS gets below 50, I will definitely pull the trigger. If we get below 50, I'll say that. But if not, then we'll keep it above. The last time I bought it was 28 though, so I'd be buying way higher than what I bought from last time. Yeah, Webull does have earnings today. I'm not excited for them because I don't really know much about the company. I am curious to see what numbers they put up and if there's any real growth that's exciting to the street. So we'll cover Webull earnings today after the bell and see what they put up. It was 52 today. Yeah, but below 50, bro. I need that 4. I need to see that 4 psychologically to be like, yep, I'm getting a good deal. I'm getting a good deal on HIMS. What about SoFi? I just don't want to own this stock, dude. The only reason I do want to own it is because it stays stuck within a range that wheeling it, I feel like, is the easiest thing to like. How easy has it been to print money off SoFi with covered calls? Like you do 14.50, 15. If it runs a little bit away from you, you raise it up $1 and then you're good to go. Like this stock just stays between 12 and 15. And the gamblers keep buying the calls. And it's like the easiest thing to keep just serving them the drugs and printing money off this. So as a covered call strategy, I think it's not horrible. But I just don't believe in it, dude. I really don't. I still think it's undervalued. I still have my options, even though those options are decaying day by day. And if this thing doesn't get to 15 soon, those options are going to be worthless. But I really don't believe in them as a tech company. And I don't believe in Anthony Noto's ability to actually build something generational, I guess is what I'm trying to say. I think he can build a great bank, but I don't think he's building anything that exciting. But I do think they're undervalued. I just don't want to have like a long-term investment in SoFi. But I have my options, and I probably will trade them in the future just for the wheeling part of it. So I will probably own them again, like as an investment. I just like dude, I'd rather buy more Hood, and it's stupid, right? Hood at 65, SoFi at 13. You would think, but it's like I'd really rather just get more Robinhood exposure. Okay, here's the vote. The U.S. Senate voted 51-44 to block California's program aimed at ending sales of new gasoline-only vehicles by 2035. So hold on, if it's 51-44. Does that mean it passes, or did they need a full 60 majority to get there? The vote halts the state's EV mandate from taking effect nationwide. I don't know if they needed the full. Yeah, they didn't need the full 60 on this because this is specific to California. So 51-44, that made sense. Okay, so boom. So now by 2035, if you want to buy a gas guzzling vehicle in California, boom, the Senate in the United States just gave you the freedom to be able to do that. And if there were any plans to expand that EV mandate, that goes out the window based on this vote. Grab 501. Back above 5. Back above 5 on Grab. What do you guys think about that, dude? Like, do you think it makes sense to stop people? Forget California. Do you think in general it makes sense for the state or the federal government of wherever you live to not allow people to buy gas cars? Like, the libertarian in me kind of feels like that's pushing it a little bit. Now, obviously, if the environment is your only concern, you probably are super happy about that. So I guess it comes down to, individual freedoms versus like protecting the environment here. I'll do a poll on that. I kind of feel it's a little aggressive, bro. Like, are we going to force everyone to buy a Tesla? Should the state ban you from buying a ICE car? Yes or no? Yes or no? Okay. 85% of you said no. I would tend to agree with that. ICE's internal combustion engine. Dude, D-Wave, QBTS, my goodness, this stock. This thing traded 300 million shares the other day. Right now, it's up 21%. The volume on D-Wave. What is this thing? The volume is 112 million, bro. Like, this stock, it's not about quantum anymore. It's people are using this stock to like make money, right? Or short it or sell or buy calls or puts, whatever. Like, people, like, it's become a life of its own in, I would imagine, the options market with 100 million traded. That is insanity, bro. Tess is going to get so rich, she's not going to come to the streams anymore because I think her average is like $2 on this thing. So once this goes to 25, 30, she's done. She's going to be on an island somewhere. My goodness, dude. My goodness. It's quantum, baby. You either believe in it or don't. And I don't know, maybe this comes crashing down. Maybe this goes higher. Maybe this normalizes 18. But as of now, there are market participants that do believe the quantum story is real. Palantir, wow, 126. Broader market's flat, though. The S&P is flat. It's not flat. It's green, but it's like it's up 70 cents. I mean, it's not really moving like crazy. Archer still down after that short report. Dell down 0.5%. Bitcoin still, dude, like Bitcoin's at 111 and it's not even that big of a deal, bro. It's at freaking 111. And it's just like, all right, yeah, that's Bitcoin above 100,000. I mean, now if it fell to 100,000, imagine how big of a dip that would be. Like, forget, like, people were thinking 60, 70. Like, now if it even falls to 95, that would be that people would buy that dip. It's like psychologically, right? If Palantir went to 105, there would absolutely be buyers, even if you think 105 is still up a lot from 70 in April. So it's just normalizing and making new levels that people feel appropriate at for buying. NVIDIA at 133, Rocket Lab at 2560, then Palantir 126 back on the day. And then IONQ, yeah, IONQ running with D-Wave as well. 26%, my goodness, dude. Amit, is the Robinhood Gold with the gold card worth it? Yes. The $5 a month is really cheap for 3% cash back and 2% IRA matches and all the other features. So I think at $5 a month, it's just really not. You get better margin rates. Like there's just a lot of things you get with Robinhood Gold. And then the credit card, dude. 3% cash back is, everything you buy, it's 3% off. So I've been enjoying the credit card as well. I just paid off a $2,000. Dude, the amount of Airbnbs and flights that I booked in the past week, because we're going to Boston and then I'm going to a couple other places that you guys will see later this month or later in June. I'm just happy that I can write this stuff off. I think I've legit spent at least 10 grand on Airbnb and flights this year, and Ubers. It has to be at least 10 grand. But it's all 3% cash back with the credit card. Boston is this week. I'm FSDing this week after the market close. So here's the link again. If you didn't get the details, you'll get an email probably tonight. And Boston is going to be this week on Saturday. All right, cool. I think that is it for the day. We'll be back on the market close. Do we have any earnings today? Earnings. We have Workday, we have Intuit, we have Autodesk and Deckers and Ross Stores. So we got 5 big companies after the bell. Oh, we had Williams Sonoma in the morning. Hold on. We can't leave without looking at Williams Sonoma. Okay, I'm going to hope this stock is down before I click on it. Not because I want people to lose money, but because they did not deserve to get into the S&P 500 before Robinhood. You know what? Down 6%. Maybe the S&P 500 committee should think a little harder about allowing espresso machines from China that are marked up by 50% to be sold on a website and allow that company to join the S&P. Maybe the most 500 important companies in America don't include a Williams Sonoma that sells overpriced espresso machines. Maybe I'm the idiot here, but maybe, I don't know, maybe houseware and kitchen appliances aren't part of the S&P. So there you go. 6% down. It's the market cap's not even eligible anymore for the freaking S&P 500. Dude, you need to have a $21 billion market cap. It's at 19.4. It would be funny if they get kicked out and they put Robinhood in, but I can't believe this one got in, bro. I still can't believe that. Cannot believe it. We'll get the Robinhood update in June. Hopefully they get in. If Robinhood gets faded again, then maybe in September. And, eventually we will see if the committee brings them in. All right. Word of the day. Here we go. Word of the day. Let's see what we got. Word of the day is teratoid. Teratoid.
Teratoid.
Resembling a monster. The goggles gave his eyes a comical teratoid largeness like that of a new bug or puppet. The newly discovered microorganism was described as a teratoid for its bulging asymmetrical ship. Teratoid. All right. So next time we see, next time we see that 20-year spike up the way it did yesterday, that is when we can use the word teratoid. Wow, 20 years chilling out, bro. This thing was at 5.15 in the morning. It's at 5.09. Maybe that's also why S&P just went green. So bond markets are not being that wild right now. The actual word of the day is hangar, which I'm going to keep saying hangar because it's spelled with a G-A-R, and basic phonics that I took back in elementary school told me that an AR is different from an ER. And so although Google and foreign propaganda and dictionaries and encyclopedias may want to say hangar is hanger, I fundamentally reject that paradigm. I fundamentally reject that paradigm. Dude, you're telling me no one has sympathy? Okay, we're going to do one last poll. One last poll. By the way, 80% of you said we shouldn't ban people from buying a nice car. We're doing one last poll. Do you have any sympathy for me saying hangar versus hanger? I spelled sympathy wrong, but whatever. Doesn't matter. Yes or no? Do you have any sympath? I don't even know how I spelled that thing for hang. Like, because you're telling me no one would have seen the AR and be like, oh, hangar versus hanger. You're telling me I had to figure out in the moment that because we're talking about aircrafts and I had to know the association between a hangar used in the context of an aircraft location, that I was supposed to change the AR for an ER in my head from a phonetic perspective. I just think that's asking a lot of me. I think that's asking a lot of people that, you know, are normal people that are just trying to get by in society. And then they get bullied for not being able to speak in the quote unquote correct way that society wants them to speak up. It's a pretty common word. Okay, it might be a pretty common word, but still. 70% of you are like, just get the hell out of here. Dude. All right, well, to the 30% who have some sympathy, I appreciate you guys. I appreciate you guys. All right, I'm out. I'll be back 3:45 on the market close. Thank you all for being here. We've got 5 earnings after the bell. We'll see what goes on. We'll see if the bond markets act kind of wonky today or if they're chill. And overall, the S&P 500 basically flat right now. Stocks are relatively green. Palantir 125.90, Rocket Lab 25.52, Nvidia 132, Robinhood 64.57. Google still holding on to 173, which is really nice. S&P at 582.87, literally up 0.0% of the day. And then Palantir right here at 125.95. Oh, and then Grab. Yes, Grab. It's running $5. I really don't think there's any news on Grab. It's just, you know, the Indonesia stuff wasn't that big of a deal, and now it's just rebounding. So, and then Quantum, big day for QBTS and IONQ, 20% days. D-Wave up 23% right now. Absolutely incredible. Google right here, 173, and then Palantir, 125.84. All right, that's it. Thank you, everybody. I'll see you guys at 3:45 on the market close. Bye, everyone. Have a good one.